Hello, my dear students. So, I hope all of you are doing wonderful, right? Yes. So, I am here to take up a new role now, as you know, because I'm going to start with a new subject, very beautiful subject called as financial management. Correct? So, let's start with the subject. Let's enjoy the subject. Let's study the subject, right, to the best possible manner. Okay. Yes. So, first of all, a very warm welcome to all of you, right? So, what is that I'm going to take up now? As I just now mentioned, I am going to take up the subject called as financial management, right? So, I'm talking about CA Inter, Group 2, paper number 8A, correct? CA Inter, that means I'm talking about new syllabus, though it may be for old syllabus as well, because syllabus is not that different. But still, I'll say new syllabus, group number 2, paper number 8A, financial management, having a weightage of how many marks? 60 marks. Okay, having a weightage of 60 marks. And as you know, paper number 8B is economics for finance, which is having a weightage of 40 marks, and that's not handled by me. I am going to take up this subject called as financial management. Right, sir. So, what is financial management? Right, as you can understand, it's management of finance. It's management of money, correct? So when I talk about financial management, it's nothing but management of finances, right? Maybe before I start off with this subject, a short story which comes to my mind. So let me just share that story with you and then we'll proceed ahead. Okay. So sir, what story? There is a beggar. Let's say there is a beggar. Okay. Hypothetical story I'm sharing with you. So there's a beggar who finds 500 rupees note on the road. How much? Rupees 500 note. Okay. Yes, the new one only. And with this particular note, obviously he'll be happy first, and then he decides that he'll have a dinner at 5-star hotel. Yes, he got rupees 500 note, but then he's thinking of what? Having the dinner at a 5-star hotel. So he goes to a 5-star hotel, orders what all dishes which is his favorite, and then eats them all. And then later on, when the bill comes, he finds that the bill is worth some 12,000 rupees. And obviously he doesn't have that much of money. He has how much? 500 rupees, or maybe the day is begging, probably again some 200 rupees. So totally he has got some 700 rupees if I talk about in aggregate. But how much he needs to pay? Some 12,000 change. So he says, I cannot pay this much of money. The manager says, what nonsense. The waiter who gets that bill says, what nonsense. So he called the senior, that is the manager, and then he answers the same way. So they say, now you'll have to come to our, washing area, right, where we wash the utensils, right? So you'll have to do that now. He says, no, I'm not going to do that. Manager says, what nonsense. You have already, you ate food worth this much, so you'll have to do that. And not just for a day, rather we'll keep you for another 10 days or 15 days. He says, no, I'm not going to. And if you want to call the cop, if you want to call the police also, it's fine with me. He says, what? Yes. The beggar replies, yes, you can call anyone. I'm not scared of. So the manager calls up, right, dials 100 and calls up police. The police comes, takes him out of the hotel, and when he was about to get onto that particular jeep, this beggar takes out that 700 rupees and gives it to the police person. The police wala, the police, nothing but the cop. And what does the cop do? He leaves him. Correct? He leaves him. So now if you understand, what has this beggar done? He has managed his money well, right? So see, please understand that I'm not saying that you do that, right? It's totally wrong, I know. But just to make it, just to make you understand, what is this financial management in short if I'm talking about? No doubt, management of finance, management of money. But then what this beggar did here, he had just rupees 700, but then he could get the satisfaction worth rupees 12,000 or 12,000 plus, right? So you need to understand that you have to manage the finances in such a way that you should get more and more returns, more and more satisfaction. Now, not exactly satisfaction, but monetary satisfaction, which is what we are talking about here. Okay, guys. Yes. So I again give a disclaimer. I'm not saying that you should do all this, but then just trying to say that with minimum cost, should try to always get maximum returns. That should be your idea. With minimum funds, you should be able to get more and more returns for you. That if you're able to do, that means you're able to do financial management well. Okay. Yes, sir. Understood. Very good. Now, next question probably which you will ask is, sir, how much time are we going to take for this subject? Now, 60 marks is the weightage of it. So roughly how many hours? So I can say 100 to 110 hours is what we are going to take for this particular subject called as financial management. Acha. In short, we always say FM. Okay. Whenever we say FM, right, financial management, right, is always maybe described like this, or people call this particular subject as FM instead of saying completely financial management. So I'll also be using it, you will also be using it, FM, right, nothing but financial management. Okay, sir. So before we start off with the topic, right, I first of all will take you through some general instructions. So first let's see those general instructions, and I request you all to kindly make a note of it, kindly take care of it, right, without forgetting it, so that later on you don't face any problem. Okay. So as you could see, first thing which I have written here is about the textbook, the material. I hope all of you have collected the material. All of you have collected the textbook, because it will be required. Maybe today it may not be required to that extent, but then from our next session onwards, we will require the textbook, because we'll have to solve some questions, as you know. So we would need the book, right? So all of you might have collected it, is what is my presumption, right? So now, if you have noticed, if you have just observe there, you will find that the book comprises of two parts, right? Comprises of two parts. One is the regular one, and another one is the practice book, correct? The book can be divided into, or you might have seen the book is divided into two parts, regular book and then practice book. In this regular book, again, you will find that there are some unsolved questions. There are some solved questions. Solved questions, you can call them as illustrations as well, because you will find that we have named it as illustration also. And then unsolved ones. So obviously, when I'm taking the sessions, we'll be solving those unsolved questions, and the solved one, the solution is already there. So that means it's a practice. What do you say? Those are the practice questions. Those are the homework questions with solutions are being given there, right? Plus, apart from this, the practice booklet which is there, right, that is also comprising of some questions, and the solutions are given. So those are solved questions only. So these two, the solved one in the regular book and the solved one in the practice book, are your homework, are for the sake of your practice, because you would like to practice more questions. You should even practice more questions. So that's where I have given it like that. Okay. Right, sir. Now, this is with respect to the book. Now you'll say, sir, apart from this, shall we follow some other book? And I'll say the same thing which I've told you earlier as well. If you want to solve, after fully solving this, if you think that you have more time left with you, or if you have some time left with you and you want to solve, then I'll say always use ICAI resources, right? Which means what? Study material, or maybe the revision test papers, or anything which ICAI has issued. Probably if you want to go through that, if you want to solve that, yes, you should do that if you have some time left. I'll be referring from my side, you know that, right? But apart from that, if you want to refer as well, you may refer on your own also. You might have already got your study materials from ICAI, correct? If not, anyways, the website, right, Board of Studies Knowledge Portal has got all your study materials as well as the other resources put there, correct? Okay, sir. So this was with respect to textbook. Fine. I hope no doubts. Now let's proceed. Sir, are we going to have test again like we used to have in other subject? Yes, obviously we are going to have test. Some regular tests we are going to have, and mock test as well. To be very precise, as you could see, I have written the number as well here. And what's that number? Now guys, what's that number? Some 4 or 5, right? Some 4 or 5 tests will be there. Regular test, slip test, whatever you want to call, right? So as and when we complete some syllabus, I'll be sharing the test papers also with you. And after a day or two, I'll be sharing the suggested answer also for those tests. Then after completion of the syllabus of this subject, you'll have some mock test as well. And again there, 1 or 2, 1 is compulsory anyways, and 2 depends on, maybe you can say, your interest, right? 2 depends on your interest. So if you want 2, we can have 2 as well, but 1 is mandatory. Correct, sir. So with respect to test, I hope you have the clarity, right? Regular test will be there, for which I'll provide the suggested answer as well. And then you'll have mock test once we complete once we complete the full syllabus, right, of this subject. Okay, sir. So textbook, we got an idea, that is material. And then secondly, we got an idea about test. Now, next thing which I would like you to take care is about the notebook, right, about the stationery, right. So you should have a separate notebook. I hope you know that, right. I need not tell you, because you are not supposed to write this in rough book. You are maintaining a separate notebook for financial management, and needless to say, if that one book gets over, the second book comes in, right. So notebook means it can be notebooks as well. You have read General Clauses Act now, right, in law, so you know singular can mean plural as well. I hope you're able to recall that. Yeah. So that if possible, please have a single ruled notebook, because you know ICAI, right, they give you the booklet in the examination, the answer sheet, which is single ruled. So I always say that, and I'll say for this subject as well. And that's where you could see, even I have used single ruled board here, right. It's not a plain board which you could see, it is a single ruled one, correct. Then in that notebook, I would suggest please make index, okay, please make index, and please have page numbers as well, okay. Have index meaning what? In that index you can write so and so question number, so and so page number, correct. So if you want to know, let's say we are solving some topic, right, wherein we have got 10 questions. So question number 1, on which page you will find the solution. Question number 2, right, you can have small columns. So question number, page number, question number, page number, like that. As per the size of your A4 size notebook, you can always have index, which will help you for easy reference, okay. So that you can do. I hope I'm able to make it clear, right. In your notebook, let's say this is your A4 size paper. So what I'm asking you to do is have, what do you say, columns like this, wherein you'll have question number, you'll have page number, you'll have question number, you'll have page number. So question number 1, let's say on page number 1 you have, or let's say page number 3 you have, you can write, right. Same way page number 2, question number 2, question number 3, question number 4, like that you can, right, write the question number and page number beside it, so that it becomes easy for you to solve it. And before that, you'll say, sir, okay, shall I write chapter number, topic number? Yes, you can do that. First here you can insert that, and then give the question number, page number. This way you can number your notebook. First of all, page numbering you can do, and once you have the numbering, as and when you start solving the questions, please write the topic name, question number, page number, question number, page number, so that you can easily refer it, right, sir. Then apart from this, you should have an additional notebook, you know that, right. The additional notebook, which is relating to what? Relating to practice, I mean solving those practice questions which are there in practice booklet, as well as some illustrations being given in the regular book, right. And you can write test as well in that. So maybe front side you can use it for practice, and back side you can use it for test. This way you can have another notebook, okay. So it's like classwork book, and then homework book, plus homework book also is for test book, but have it from the back side, okay, test from the back side. Why I always say test notebook? Why not in pages you can write the test? Because you can compare your performance, right. Later on also, if you want to go through the test paper or the solutions of the test, you can always go through in future as well. That's where I always suggest that you should have a separate book for test as well, correct, instead of just writing in pages. So 2 notebooks is what I'm suggesting. Rest your wish. You know, India is a democratic country, so I cannot force you, but then this is what is my suggestion, because this is what makes sense. Now apart from this, as you could see, I've written here pencil is one which we expect, pen, scale, etc. So some decent stationery which is required also you should have. You might say, sir, highlighter, shall we keep multiple color pens? Yes, you can, but in examination multiple color pens, highlighter is not allowed. So make sure that if you're using it in the class, okay, using for the classes in the class, it's fine, but don't use that in the examination, correct. Then calculator, a simple calculator, not a scientific calculator, please make sure, okay, is what is required to be used. So make sure that you're using only a simple calculator, which probably you might have used in your other subjects as well, accounts or financial costing, right, or taxation. So maybe this sort of a small size also will do, correct. A simple calculator with some decent functions which are required. I hope you know that. I don't have to elaborate on it. So that is required. But one input from my side, that please use the calculator, okay, please use that calculator, rather I will say that calculator which you are going to use in the examination. or make sure that the calculator which you're using now, the same calculator you're using even in your examination. And I hope you know the reason why I'm saying this, because you get used to it, you practice on it, it will always be easy for you in the examination also. Right, guys? Correct. Okay, sir. So with respect to stationery and notebook, I've told you. So material I've told you, that is textbook. Then test I've talked about. Then I've talked about what? Even the notebook. Correct? Yes, sir. So now let's proceed with the next item. What is the next item which I have written there? When I'm talking about financial management, please understand it's not just about practical questions. We'll have some concepts as well. We'll have some theory as well. People think that, okay, all the 60 marks means 60 marks questions only will come, practical questions wherein we are required to solve, wherein calculations will be required, numericals will be there. No, it's not like that. Please understand, right? There is some sort of theory also which exists. There are some concepts also which exist, which ICAI might ask you. Apart from just solving numericals or numerical questions, please remember, please understand, we'll have theory as well here. So please don't ignore theory, pay attention to theory as well if you want to score maximum marks. If you just focus on practical questions and if you solve them without understanding the theory or without by hearting or memorizing the theory, maybe you will not be able to score maximum marks. So my humble request, pay attention to both practical questions and theory. I'm telling you in the beginning itself so that you don't forget it. Right, sir. So I hope now you have a notebook, you're noting down things. Correct? If you are not, please pause this video, take out a notebook, right, and write the subject name, write first your name, and then start writing sequentially whatever we are discussing. Okay? Right, sir. So this is clear now. This is a blend of practical questions and theory questions. In examination also they ask theory questions apart from just practical questions. Okay, next. I would like to just update you here, or maybe just mention here, that the sequence which you might find in the ICAI books and the sequence which we have in our books might be different, right? I have rearranged the sequence to some extent. Reason very simple. This particular rearrangement will help you understand the subject in a better manner. So please don't be surprised, right? Don't be shocked. If you see the ICAI study material and you find, array, sir is taking some topic which is maybe at the end in ICAI books, or maybe it is not first, but maybe some third, fourth topic. It might happen. But please be assured that everything will be covered. I'll be covering everything what is there in your syllabus. Okay, maybe the sequence may not match, maybe the grouping may not be exactly the same as that of ICAI books, is what I'm trying to convey. I hope I'm clear on this. Correct? So don't really bother so much, don't be scared that what is going on, sir is changing the sequence. You know, in the other subject also which I have taken up, right, the corporate and other laws, I have changed sequence, I have done some grouping, regrouping. Same way I'll do it here, but cover everything. Okay, yes. Next one. Few people say that accounts and finance is like one and the same. No, let me tell you that accounts is different and finance is different. The knowledge of accounting is really important for, financial management. Same way the knowledge of costing is really important for financial management. So that means what I'm trying to say is FM requires the knowledge of accounts and costing. Does this mean you'll say, sir, it doesn't require the knowledge of economics, it doesn't require the knowledge of mathematics, it doesn't require the knowledge of maybe taxation? No, I didn't say that. But then please understand, whatever is the output, I repeat, whatever is the output of accounts and costing, please understand that will be the input for financial management. That will be the input for what? Financial management. So it is very important to note that the basics of accounting, the basics of costing are quite useful for understanding financial management properly. Right, the output there, right, the balance sheet or the P&L, right, the financial statements from the accounts, and then when you talk about cost sheet, these are useful tools. These are going to be used to do financial management. Am I clear? Right, sir. So accounts and costing is important, right? At least fundamentals, basics is important. The output of accounts and costing will be input for financial management, right? How, you'll understand, don't worry about it. I'm just giving you some general instructions, general things, so that you're making sure that later on you don't ask me these questions, or rather you will not get these questions. Okay, next thing I would like to just make what do you say specify here is all topics are interlinked. All the topics are interlinked. So it's very important that you don't miss out any class. You watch all the videos properly in the sequence which I'll be sharing or we'll be sharing with you. You'll have to use the same sequence and watch all the topics. Every topic is important. Every topic is interlinked. Okay. So it's like while discussing topic number 5, I'll give the reference of topic number 2, 3. I'll give the reference of topic number 8 as well. So that way now you know like how train is connected, the bogies in the train are connected, no? So one after the other. Same way here, these topics which we are going to discuss one after the other are all linked with each other. So it requires you to what do you say, not miss out any classes. Had it been face to face, there was a possibility of you missing out, I know, but then being this video classes, so obviously you will not miss that, I know that, but my job is to just make sure that you know this properly. Okay, correct, sir. So this was the 7th point which I have written here. I hope it is making sense. I'm just trying to give you some points, give you some few things which probably you might ask me later or you might think of. So I just thought that I should put it on paper first and then start off with the topic. Okay, right, sir. Next thing, after this, all topics are interlinked. As you could see here, everyone uses financial management, right? Who doesn't use money? Tell me, right? You as a student uses it, not just the businessman, right? A doctor, right? A professional like a lawyer, engineer also, you'll say, apart from doctor, might use financial management, right? Same way housewife might use financial management. She also has some money, right, which she'll have to spend throughout the month, right? Just go and ask your mom. She'll tell you that she takes some money on a monthly basis from your dad and then spends it on various items. So don't you think she is doing financial management? Yes. You take some pocket money from your dad, from your mom, right, and then spend it in a month or maybe on a daily basis. So you know, again, you're doing some financial management there. You're trying to manage that money in the best possible manner and achieve your objectives. So is it that only the business community uses FM? No, it's everyone who uses FM. Please understand. That's why you'll find in engineering also they read financial management to a certain extent, right? You please understand, in all the courses now they're including financial management to some extent, right? And the idea is very simple, because every one of us uses money. Every one of us have to manage finances. So that's where this. Now the question comes, sir, are we going to study? Are we going to study from the financial management, that is this subject, from the point of view of everyone? The answer is no. The answer is no. Please understand, the answer is no. Meaning this particular subject which we are going to study here is going to be from business point of view. Okay, from business point of view. Please understand. And that too, let me just tell you now itself, that too from the point of view of a company. From the point of view of a company. And in that also, mainly, generally, you can say manufacturing concern. Manufacturing concern. Are you getting it? So we are going to study this subject, financial management, from whose perspective? Business perspective. Okay, from which perspective? Business perspective, businessman's perspective. And in that also we are going to talk about what? Company form of business. Very hardly I'm going to talk about some other form of business, or we are going to talk about other form of business. We are mainly going to study from the company's point of view, and that too from manufacturing point of view. That's where you'll find in balance sheet we'll keep talking about equity, share capital, okay, debentures and all, because those are there in company form, correct? You don't find them in partnership or maybe any other form of business. Okay, and then as I've written here, and as I'm telling you, we are going to mainly talk about manufacturing concern, mainly. Maybe it can happen, you may have trading concern as well, but generally I'm saying it's about manufacturing concern. So keep this in your mind. So you'll say, sir, what about then partnership firm or individual sole proprietor? They also have a business and they also do financial management. So we're not going to learn about that. The answer is no. It's not that we're not going to learn about it, but then please understand that when you learn from a bigger perspective, right, broader perspective, then obviously you can narrow down that perspective to that particular lower level which you require. So that's where I say doesn't focus, right? Doesn't focus on that particular level. They say bigger level is what you study. Then with that bigger level's knowledge, probably you can apply that to the smaller level. So if you study from company's perspective, automatically you are now, what do you say, ready to do that management, do that financial management for a smaller level of business also. Understand, my dear friends? So please understand that company form is the highest form of business. If you know how to read at that particular level or apply or understand at that level, that means you can apply at a lower level as well. Okay, right. So this was this point. Now next thing, most of the students I have seen, or most of the people I have seen, never bothers about presentation. Right? They think presentation is not that important, but let me tell you, presentation is very important, not just because you are going to write the examination, but otherwise also it's very important, because if you don't present anything well, the reader may not be able to understand. So it's very important that you focus on presentation. My focus will be always on presentation, how the formats are, headings and everything. You should be writing it properly. Okay, so make sure that from day one you're presenting things well. Okay, at the same time, I'm not saying that elaborate too much. Be precise, be concise. Okay, write to the point to the extent required. As I have said in other subject as well, I'm saying this now as well, that if you elaborate too much, which is required not in CA examination or professional examination, it might be required in your BCom examination, MCom examination. The more the pages you fill up, probably you'll get more marks, but it doesn't happen like this here in CA Inter, right? That is the professional courses. So make sure presentation is very important, is being done properly, and then you're presenting it in brief to the extent required and not elaborating too much, not unnecessarily extending anything. Okay, right. Right, sir. The next thing, common sense, which is not that common, isn't it? But I know you guys have quite good common sense, right? So I am sure that you'll use that common sense, because only having it is not enough. Using is also required, right, or important. So I know you'll be applying your common sense, plus to some extent business sense as well, because we are dealing with financial management from which perspective? We said business perspective. So you will say, no sir, my father is from not a business background, he was always into employment, he is into employment. Yes, but then again, is he not working for some business? Are you not dealing with any business community or businessmen? Daily you come probably transact or associate with them, correct? Daily you might come across some businessmen, you might have some transaction with businessmen, right? You might have some general idea about business. So it's not that you don't know anything, right? You're into commerce field, right, from your 11th, or maybe not, if not 11th, but from CA foundation. So I hope you have some sort of, I'm not saying complete business sense, but some sort of business sense you have, and you'll be using that as well. It will become easy if you do that. Okay, plus you should have some patience. It's very important, because many a times it will so happen that if you are impatient, you will give the wrong answers. You'll approach the question in a different way, which is not correct, my dear friends. So make sure that you have some patience, and then take care of time. Time management is really important, because 3 hours is for paper number 8A and 8B both. You need to observe within how much time you're able to solve some question. Whenever you're solving the practice questions, whenever you're solving those homework questions, right, from the regular book or from the practice book, make sure that you note the time, right? In class probably I cannot say that, because in class also we can do that. It's not that we cannot, but completely it's not possible. But when you solve on your own, at your own pace, you should observe how much time you're taking and work on it. Remember, you'll have to write the examination. Within 3 hours. So don't forget that. Normally people know, I need to write the examination. Yes, but then it's incomplete if you say this much. You'll have to add there within 3 hours. For paper number 8A and 8B, both I'm talking about. So please make sure that you focus on time management as well, right? So common sense, business sense, patience, time management, all are important, and I know that you will be using them all. Right, sir. So we have talked about what till now? If you just recall, we have talked about the textbook, the material, whatever you want to say. Then test we have talked about already. Then about the notebook and the stationery I've talked about, including the calculator. Then I've told you this paper will be a blend of practical as well as theory questions. About the grouping, regrouping, which I've done, I've told you. Then the output of accounts and costing I've told you is the input for the financial management. Then all topics are interlinked, right? From whose perspective, which perspective are we going to read financial management, that I've told you. Then about the presentation, and then few things like common sense and all, right? Then coming to the 11th point, which you could see here, as I've said, you'll have to solve questions, guys. Otherwise, you'll not get that confidence. If you just audit the questions, if you just verify those questions or solutions, is not going to help, because you'll say, sir, anyways, you have given the solution in those illustrations or probably the practice book. So I've seen the question, I've read the question, and I knew the answer. Anyways, I've seen the answer as well, I've seen the solution as well, which you have given, and I'm pretty sure that I'll be able to solve it. No, my dear friends, let me tell you, you'll be committing a mistake. Please solve questions. In class also, please solve the questions. Okay, while watching the videos, please solve, plus practice questions which are given. Make sure that you solve them. Only reading, only verifying will not be enough. Okay, so my humble request, solve questions. But then when I say solve questions, please understand, don't just solve it. Try to analyze it, try to observe what is that you're learning from solving those questions, because every question will give you some learning. Some outcome will be there, some conclusion you can draw. So make sure that you are trying to observe, you're trying to analyze, you're trying to conclude after solving the question. Observation is really important. What is the analysis of that particular question? Okay, whether you've done the analysis or not. If you have not done, analyze it. Observe what is that question trying to say. Is there any new point there? So I believe you should always solve questions and do the analysis. Observe what that question is trying to say. Any new point there? How you have solved? Okay, what is the other possibility? Is there any other way of solving that question? What can they change, if they can change in this question? Like that you need to think about. Okay, not just solve questions and leave it. Okay, and there will be a few things which I will be sharing with you as student note. That means maybe that is not important not important, I'll not say, but I'll say that is not required to be written in the examination, but it's important for you to understand the question carefully, or the concept. Okay, so you will have something called a student note. Okay, not in every question, but some of the questions I'll be making you write student note. What does student note means? Student note means which is important for your understanding, but may not be required to be written in the examination, right? Okay, sir. So the idea is to gain as much as possible, okay, the conceptual clarity. As much as nahi, rather I'll say you should get the complete conceptual clarity. That should be our idea. So if you are solving 100 questions, and after solving those 100 questions, let's say you cannot solve the 101st question, then what's the use of solving those 100 questions? So make sure you solve it in such a manner that you get the complete conceptual clarity, and it helps you to solve any number of questions later. Okay, right, sir. Now when you find in a question firm, right, maybe we'll be also using firm. So don't think about just partnership firm. When we say firm, probably we are talking about business, we are talking about a company, is what you need to understand. Okay, so when we solve some questions and you find that they've used the word a firm, that means then it's not just a firm, because when you see the data you will find, oh, firm having equity share capital, that means basically they're talking about a company, right? So in the context you can easily understand that, but I'm just trying to highlight that for you. Next, practical orientation is really important, but you cannot forget the examination or ICAI. Meaning, it might so happen that you might develop so much of love towards this subject that you'll start following, or you'll start trying to connect with the practical world, right? You'll maybe, as I've written in the next point, that you'll start reading business newspapers, and then probably you'll get so much engrossed, right, so much into that practical world that somewhere you might miss out that you have an examination as well. So please make sure that you need to draw the right balance between the practical orientation and the examination approach. Many a times we'll be solving questions which may not be practical as well. So what are you talking about? Acha, tell me, do you find any business, in reality I'm talking about, right? Practical situation meaning reality. If you talk about real world, do you find any firm which will have 100% debt? 100% debt. You'll say no sir, but theoretically do you think in any of the questions we can have 100% debt as well? Yes, quite possible. So please understand that you will have to think about the practical world, but then you cannot forget, you cannot ignore the examination. You cannot keep questioning the question itself, right? You just need to follow what is given in the question and try to solve it. Sometimes maybe you will not agree with the logic which is given in the question, but you know the concept, you need to apply that. Okay, so make sure that you don't question the question too many times. Okay, sometimes I will question it. I will tell you that this is how practically it doesn't work like this, like I've told you just now, one example. Same way, when we go into the topic, we'll be talking about it, but I'm just telling you that it might happen. Sometimes I'll say let's just think from examination perspective. Sometimes, not always, very few times that will happen, very few times, but I'm just trying to tell you that this might happen. Okay, next, if you want to gain what do you say, proper understanding, if you want to get into this subject, if you want to understand this subject properly, and now see, if you want to be a proper, a thorough chartered accountant, if you want to be a professional, you need to start reading business newspapers. Sir, I don't have time to study these subjects only, and you're talking about business newspaper, not just newspaper, but business newspaper, right? How is it possible? Guys, if you have some time, probably you can download the app now. Newspaper doesn't mean a hard copy of it now, you know that, right? So you don't have to even subscribe by paying some money and all, but free of cost you can download some apps, right? Business Standard, the Economic Times, Financial Times, there are so many. Okay, and start reading maybe the headlines. Initially maybe you'll not be able to understand anything, but slowly you will start understanding things. You'll get that, what do you say, interest in the subject. You'll start enjoying it, and maybe you will not feel like reading then the other newspaper. You'll be reading business newspaper. So my humble request, because you as a professional, as a chartered accountant, would be assisting the business world, so you should know the business news as well. Should understand the subjects much more in detail or properly. That's where I'm suggesting business newspaper. In case you say you don't have time, then at least I'm saying read headlines or something. Maybe take out some time, try to read that, understand to the extent possible. If not, at least get into that habit. Okay, my suggestion again, to follow or not, it's up to you, right? India is a democratic country, correct? So these were a few things which came to my mind, so I had just thought of writing it and making you aware of this. So I hope there is no doubt in this, right? Points are pretty simple, and I hope you will be taking care of it. Acha, this is an inclusive list, of course. This is not exhaustive list, this general instructions which I have given. So that means maybe while solving some questions, or maybe while sharing some topic or concept, I might say something more, and that's where I've left this place. So if you have also noted along with me, you can also leave some space and the general instruction can come here, correct? Like one, if you want, I can write down immediately because I was talking about it. That is student note, right? I talked about what? Student note. I said this is important for what purpose? For understanding purpose, isn't it? Important for understanding the concept. Important for understanding the concept properly. Not required, I'll say, not required to be written in examination. Okay, this is another thing. So whenever I say student note, that means you have to make a note of it only for the purpose of your understanding. Okay, later on, if you want to, maybe you will forget few things, so maybe those type of things I'll make you write in the student note section, and that is not required to be written in the examination. Okay, and as I've told you, apart from this, again we may come across more things which you can come and write here. That's where some places left, you can also leave some place, right guys? So I believe all of you have noted it, correct? So that's great. So now, before we start off with our topic, let's first understand the syllabus. Okay, so I have completed general instructions to the extent I wanted. Now let me talk about the syllabus which you have in financial management. And guys, I just remind you again, please take a notebook if you have not taken, start writing. Don't just watch this video casually. Please make sure that you're sitting in a peaceful environment with your headphones or earphones on and noting down things as you do it in the class. Okay, right? And somewhere if you're not able to note down and you think that I'm going ahead, pause it and note it down. I'll try, as you know, my level best to make sure that I give time to note down as well. But in case I go ahead, then you can pause it and note it down, right? So talking about the first one, what is the first one? First topic, as you could see, scope and objective of financial management. What? Scope and objective of financial management. Okay, sir, there is some topic which will help us understand exactly what is the objective of FM, right? Because every subject will have some objective, no? FM also will have some objective or not? Law has some objective, costing has some objective, accounts has some objective. Same way, FM also has some objective, right? ICI also has set some objective for you relating to this subject. And what is that? I've told you earlier as well in the other subject that it's about not just understanding, it's about application as well, right? It's about presentation as well. So you have to work on all the three: understanding, application and presentation, right? All the three, not just understanding but also application, and then presentation also is equally important, correct? So now when we read this topic, we'll get to know overall financial management, I can say. Okay, and that's what we are going to do today. Next, apart from this, we've got something called as ratio analysis. Okay, the next topic, ratio analysis. I hope you're noting down. Next, third one, you can write leverages. Third one is nothing but leverages, which are of two types: operational leverage and financial leverage. Okay, so sir, what is this? Scope and objective of financial management, understood. Okay, some sort of scope, coverage of FM, overall objective or objective of FM we'll discuss, fine, right? It's sort of introduction to financial management. I can say this topic which I have written here is nothing but sort of introduction to financial management. Sir, do they ask questions also from this introduction to FM? Yes, of course. Do they ask from each and every topic? Okay, ratio analysis is the next. Ratio analysis. Okay, sir. Third one, leverages, and I've written there operational and financial, right? So, sir, what is leverage? It's about measuring risk. So there are two types of risk which are there in business: operational risk and financial risk. So measuring the operational risk, understanding the operational risk, understanding the financial risk is nothing but that leverages, measurement of risk. Okay, we'll discuss in detail anyways later, you know that. I'm just trying to tell you or give you now the syllabus. So third one is what? Leverages. First one, introduction to FM. Second one, ratio analysis, right? Calculate the ratios and analyze them. GP ratio calculate, and net profit ratio calculate, right? Return on investment ratio calculate. You know, there are different types of ratios. You might have already dealt with this topic in your 11th, 12th also, maybe, who knows. So analyze them. Not just calculate it, but analyze them. Ratio analysis. Then leverages, operational and financial, which is nothing but measurement of risk. Which type of risk? Operational risk, financial risk, right? Doing business, that is day-to-day operations, has some risk or not? Yes. Financial risk, right, is also there. When you take the funds from the debenture holder, there's a risk. When you take the funds from the shareholder, there's a risk. The amount of the risk might be different, right? It may not be the same. So we'll have to study how much is the risk involved. So that's the topic, leverages. Okay, right, sir. Then fourth one, as you could see here, cost of capital. What is the fourth one? Cost of capital, right, sir? Then cost of capital, meaning, are you able to understand something? Yes. Sir, what is the cost of the capital? If someone is giving you money, then obviously he'll charge some cost, correct? If the shareholder is giving you some money, if the debenture holder is giving you money, do you think he expects some return? Yes, he expects return. So it's a return for him, it's an earning for him, and for the company, for the business, it's the cost. So cost of capital, trying to find out what is the cost of the capital is what is cost of capital. Then next one, capital structure. Structure of the capital. Is it that the total capital will be from debt? We said no, right? So there will be some debt, there will be some equity. How much is the proportion of that debt? How much proportion of equity? That is capital structure, capital proportion. Okay, so that's topic number 5. Okay, sir. See, please note down. Later on, anyways, you'll understand all this because we'll be discussing them in detail. Okay, and today I am going to give an outline of this, so don't worry about that. Okay, so fourth one I have written cost of capital, fifth one capital structure, sixth one is dividend decisions, right? Dividend decision, whether the company should be giving dividend or not giving dividend. If giving dividend, then how much dividend? That is what the topic dividend decisions is all about. Then we've got working capital management. We've got what? Working capital management. That means the day-to-day operations have to be managed well. So regarding that, we have the chapter working capital management. So some fancy names, yeah, maybe you can say. Then capital budgeting. Next one is what? Capital budgeting. That is budgeting the capital expenditure, right? Budgeting the capital expenditure. When you start any new business, when you start any new business, do you need to budget the capital expenditure? Yes. Or you're already into a business, there's an existing business. Do you think you might go for expansion, diversification, so thereby some capital expenditure incurred? Yes. So budgeting the capital expenditure. Okay. Dividend decisions, did you follow? Yes, sir. Decisions relating to dividend, how much to give, how much not to give, or whether to give or not, first of all. And then if have to give, then how much to give. That is dividend decision. Working capital management, what did I say? Management of working capital, the day-to-day management, the day-to-day operational operations. You need to manage it well, correct? So regarding that, we have got working capital management. Then capital budgeting, budgeting the capital expenditure. If you want to start a new business or already existing business but wants to diversify, wants to maybe expand. So this chapter, this topic, right? You would like to assess, right? You would like to see the financial viability. If it is financially viable, then you may start. Otherwise, you may not start that. Correct? Next. Then ninth topic, capital budgeting under risk management, or under risk, not management, sorry, under risk and uncertainty. Capital budgeting under risk and uncertainty. That's another topic. So you can understand capital budgeting, okay, under risk and uncertainty. Business means risk and business for future, right? Perpetuity is what you think of. So please understand there will be uncertainty as well. The moment you say future means uncertainty. Next moment what is going to happen, we don't know. So there's an uncertainty. So sometimes, there are some limitations within which you have to take decisions. So capital budgeting under risk and uncertainty we have to discuss. That's topic number 9. Okay, sir. Then lease financing. Next is what? Lease financing. Topic number 10. Lease financing meaning what? Whether to buy the asset or lease the asset. That's the question. Sir, if we have to buy the asset, buy from own funds or borrow and buy? That's another question. Correct? So that has to be answered here. Lease financing. Buy the asset with own funds or borrowed funds, or maybe instead of buying, go for what? Leasing, renting. Correct? Is it that if I want to go in a car, I need to always buy a car? No, I can use a taxi also. Achha, if I have to buy a car, is it that I have to buy always from my own funds? Can't I take a loan? Sir, you can take a loan. So that is where this topic called as lease financing. Okay? Right, sir. Then 11th one, sources of financing. Okay, what is the 11th topic which we have? The next topic, the last topic which is written here, sources of financing, sources of finance. From where do they get the money? From where do we get the money? Okay, that is sources of finance. You'll say, sir, shares, debentures, loan, ADR, GDR, bonds, like that. There are various types of sources. So that's what we need to discuss. Okay, probably you know a very few now, but when we read this topic, you'll get to know there are a lot of sources which the businessman can use to procure funds. So that's this topic. Okay, topic number 11. So that way your syllabus is, okay, we've got these many topics in your syllabus right from 1 to 11, right? What did I say? Just repeat. Introduction to FM, that is scope and objective financial management. Then we've got ratio analysis, we've got leverages, right, which is operational leverage and financial leverage. Then cost of capital, capital structure, right, dividend decisions, working capital management, capital budgeting under risk and uncertainty, lease financing, sources of financing. Okay, these are the topics which are there in our syllabus. This is written even in your index, right, of the book. You might have already seen, I know that. and some of you might not have made a note of it, that also I know. But please guys, as I've told you, do some hard work. Don't just watch the video. As I have written, when I can write, why can't you, right? So put in some efforts. It will be easier for you. It will be helpful, is what I can say. Right, sir. Now, sir, you have circled this 6th topic, 9th topic, 10th topic with some orange color. Is there any reason for it? Yes, there is a reason for it. These 3 topics, please understand, okay, which I have circled here, okay, 6th one, 9th one, and 10th one. As you could see here, I've circled it. These were not there in the old syllabus, but are there in new syllabus. Correct, you heard me right. These 3 were not there in old syllabus. These are there in new syllabus. Okay, sir. That's why I have circled it. So someone who's watching from the someone who's an old syllabus student, okay, and is watching this video, probably he can know that these 3 is what is not there in his syllabus. Okay, sir. Then instead of that, did they had some other topic in the syllabus? Yes, they had something else, like time value of money was there, plus even what do you say, cash flow and fund flow management. So time value of money anyways is there, is now CA foundation, you know that. And when it comes to this what do you say, cash flow, fund flow management, fund flow may not be there, but cash flow statements, right, is there in your accounts. So that's where they have shifted those 2 topics to foundation and accounts, or already there in accounts, I know. Fund flow statement anyways people hardly use, so they have removed it from the syllabus. So old syllabus students, please make a note of it. Right, sir. So 3 additions in the new syllabus and 2 I'll not say deletions, but shifting. Okay, then you might say, sir, why did you use some indication here with blue color? Correct, as you could see, I have done this, you know. So is there any reason for doing it? Yes, let me not maintain so much of suspense. Let me tell you that yes, I have done this because of the syllabus, change in syllabus which happened last year. As you know, there are some deletions in the topics which have happened in while teaching business laws also. I've told you, right, corporate and other laws. Same way here also. So good news for you, you have a reason to smile, that topic number 9 and topic number 10 is partly excluded. Yes, you heard me right. Lease financing, only theory is there, practical questions there, they've removed it from the syllabus. And in capital budgeting also, I'll tell you that there are a few things which are eliminated now, or maybe will not deal with those topics only, so you don't have to worry about it. So that's where these 2 topics I have indicated with blue. Rest of the topics as it is, they have what they have come up with in the new syllabus is still there for you for your attempt. Okay, right, sir. Now, so what did I do till here? I have told you about the general instructions, given you the general instructions, and then also we have dealt with the syllabus, right? I hope by now you might have understood the syllabus. If not, don't worry. Now, next thing which I am going to do, as you could see here, is the questions which one can ask when he's starting the business, or the questions which are posed when you start a business, or when you want to expand the business, when you want to run the business, is what I've written here. See, when you want to start any business, you'll have some questions in your mind, isn't it? And if you say, no sir, I have already started a business, to run a business, to operate a business, right, to expand a business, whatever you say, again, don't you think you will have some questions in your mind? Yes. So that's where I have listed out some questions for you. Okay, I have listed out some questions which probably will come to our mind. Okay, so give the heading. What is the heading? Questions when one has to start the business or has to run the business. And business means what? We are talking about company. I've told you earlier only. And in company also, generally we are talking about manufacturing concern. So maybe you'll think of some business, like let's say steel manufacturing business you want to start. So when you want to start a steel manufacturing business, do you think you'll get some questions in your mind? Yes. That is what I have written here. Those type of questions I have written here. Okay. So let's go one by one into those questions. I hope you have written the topic, the heading, questions when one has to start the business. Questions when one has to start the business. or run the business? Okay, right. So the first question which you could see here, which business to start? Okay, which business to start? And as I was telling you that maybe we'll think of what? Steel manufacturing business. No sir, I want to think about film producing business. Okay, think about it. Okay, you say no sir, I want to think about cement manufacturing business. Think about it. Who's stopping you? I'm just taking an hypothetical example. So whatever business you want to think of, you can think of. So this is the first question which we'll have in our mind. Which business to start? Next thing, how much money is required to start that business? How much money is required to operate that business, run that business? How much money is required in that business? That is the next question. So that's where you could see quantum of investment, right? I hope you are noting down as well. What did I say? What was the first question? Which business to start? Next, what is the second question? Quantum of investment required in the business, right? How much money is required in the business? That's the second question I've written. First one, which business to start? Second one, quantum of investment required in the business. Okay, sir. Right? Which business and then quantum of money required in the business. Right. Next. From where will the money be procured or arranged? That's the next question. Okay, you got to know this much of money is required, but now where do I get that money from? Right? What is the source for my money? So that means from where will the money be procured or arranged? That's the next question. Right? From where will the money be procured or arranged? Will be the next question. Right. You'll say, sir, you have left some space after that third question. Yes, because we'll be discussing certain thing, and if you want to write down that as well, you can write down. So you can also leave some space after this question. Correct? You can leave some 2-3 lines and then write the fourth question. So which business to start is the first one. How much money is required is the second question or the next question. And then the next one will be from where can we arrange this much of money? Okay. Then what is the composition of investment? Okay. The next question is, what is the composition of investment? Meaning, if you're getting money from, where will you get the money from? How much money you should get from which source? Right? So, how much of debt? How much of equity? In debt, again, you'll say, sir, how much of debentures? How much of term loan? Like that, you may have some questions. So, from where will you get the money? And from those sources, how much to procure? You have decided, okay, I'll take a loan, I'll go for debentures, I'll go for share capital, fine. But then, how much from debentures? How much from equity shares? How much from preference shares? How much from by way of issue of debentures? So like that, you will have some questions. So what is the composition of that investment? What is the composition of that money which you are sourcing? That is the next question. Okay, so that's our fourth question. Next, fifth one, what is the cost of bringing that money? If someone is giving you the money, do you think he'll give you free of cost? No. So we need to understand properly that there will be a cost involved for procuring the funds. Correct? No? If someone comes and asks you 1 lakh rupees, do you think you'll give him free of cost? No. You'll give that 1 lakh and expect some return, right? You'll say, sir, I'll be charging interest. That way, there's a possibility that the company will incur some cost for procuring the money. Okay. So that's where I've written that next question. What is the cost of bringing the money? Correct. I believe all of you are writing and also leaving some space because we're going to discuss on this. Now, first, I'm just raising the questions. Once I raise these questions, then I'll answer those questions. Right. So first one, we said which business to start. Second one, I said quantum of investment, that is how much money is required in the business. Third, from where will the money be procured? Fourth one, what is the composition of that? Correct. The debt, equity. So how much is the debt? How much should be the equity? That is the next question. Then as we said, what is the cost of bringing that money? That's also important, right? We need to keep a check on that as well. So what is the cost of bringing the money is the next question. Next, what is the risk involved in doing the business? See, doing business itself is risky. Am I right? Doing business itself is risky. And doing the way the business should be, okay, doing the way business I mean, the way of doing business also is risky. Are you getting it? Business is risky. Against employment, you have an option of going for employment. Instead of that, you prefer starting your business, doing your business. So that's risky decision. Plus doing the business, right? Operating the business, running the business, also risky. There are various ways of running the business. How exactly you run, correct? Doing CA is risky. And let's say you take some educational loan for doing CA, that's again a risk you have taken. So same way I'm saying, doing business is risky, and doing the way it should be done, okay, that's also risky. So what is the risk involved in doing the business? We should understand, correct? So that's our next question. What's the risk involved in doing the business? Then, because see, every business will have different types of risk, isn't it? If you talk about a coaching, line, there's also a business, so there is a cost, there is a risk involved, right? If you get into film production, there is a risk involved. How much risk again differs. You want to get into steel manufacturing, you want to get into oil exploration, you want to start maybe a news channel, right? Every business will have some different risk, and the way it should be done also will be risky, and the risk will be different. So that's the question, what is the risk involved in doing the business? Okay, next question. If business earns profit, how much profit shall be shared with shareholders? You heard me right. If business earns profit, right, if the company is earning profit, then is it that the complete profit should be given to the shareholders? You'll say no sir, but depends, no? So that's where we're talking about the decision relating to how much profit shall be distributed. Okay, how much profit shall be distributed among the shareholders is also needs to be answered, right? If business earns profit, then how much profit should be shared, should be distributed with shareholders? That's the next question. Okay sir, so what's the risk involved in doing the business? Then if business earns profit, then how much profit should be shared with the shareholders, distributed with the shareholders? That also needs to be answered, correct? Right. Sir, what are we doing? See, I'm raising some questions. As you can understand, if you want to start some business, if you want to run some business, right, you'll have some questions in mind. I've just put those questions. Next question. If you don't have money, right, the business doesn't have money, then shall we borrow money? Shall we borrow money and buy asset, or take the asset on rent or lease? Take the asset on lease. What should we do? That is another question you will have, right? Because I've told you, manufacturing concern mainly you're talking about, so you need plant, machinery, various type of assets, but you don't have enough money. So is it advisable to borrow money and then purchase it, or shall we take that particular asset on hire, on lease, on rental basis? What should we do? That's another question you'll have, correct? Right. So if business doesn't have money, I'm repeating again, business doesn't have money, shall we borrow money and buy asset, or take asset on rent, take asset on lease? Okay, next one. How to manage day-to-day business and finances? How to manage day-to-day business and finances? Day-to-day management, right? How do we do that? So that's next question. How to manage day-to-day business and finances? How to manage day-to-day business and finances? Two more questions I'll raise here. How to judge? Okay, next question. After this 9th question, how to manage day-to-day business and finances. Next question is how to judge the performance of business or financial health of the company. How to judge the performance of business, how to judge the performance of the business or the financial health of company. How to judge the performance of business and the financial health, or not, and you can say, or financial health of the company. That's the next question, because you'll be doing business, managing day-to-day business, right? You'll be quantifying the risk and all, but at the end of the day, whether you performed what you had to perform, that's the question you would like to ask, right? And not just ask, but answer also. So how to judge the performance of the business or the financial health of the company. Next, how to take business decisions under risk and uncertainty. What's the next question? How to take business decisions under risk and uncertainty. How to take business decisions under risk and uncertainty, because it's not that always you need to take business decisions, but you need to take business decisions under certain limitations, under certain risk, under some uncertainty, some factors which are uncertain. It's very difficult to ascertain everything, no? So there might be some uncertain factors which you need to keep in mind while taking a business decision. So that's where this 11th question, right, my dear friends? So I hope you have noted down these questions. If not, I'm just reading those questions once again. If you have not noted, please note it. If you have not completed, complete it. First one, which business to start? Second one, how much money required in that business, right? Quantum of investment required in the business. Third one, from where will that money be procured? From where will that money be procured? What is the composition of that money? What is the composition of that investment, right? From where are you getting that money? How much you're getting that money? How much is the cost involved in bringing that money, right? So what's the cost of bringing the money? How much is the risk involved in doing the business? How much is the risk involved in doing that business? If business earns profit, then how much profit shall be shared or distributed with the shareholders, right? How much profit shall be shared or distributed with the shareholders? If business doesn't have money, then shall we borrow money and then buy the asset, or take asset on rent or lease? That's the next question. So if business doesn't have money, shall we borrow or and buy the asset, or shall we go for leasing? Next, how to manage day-to-day business and finances. Next, 10th one, how to judge the performance of business or financial health of company. How to judge the performance of business or financial health of company. Next, how to take business decisions under risk and uncertainty. How to take business decisions under risk and uncertainty. That's the 11th question. So if we want to answer these questions, do you think the topics which we are going to read is going to help us? Are these topics going to help us in answering those questions? Yes. That's where I have raised these questions, my dear friends. So you will understand with the help of these questions that the topics which we are going to read is going to be applied. Okay, so these questions can be answered with the help of the topics which we are going to study, my dear friends. That means in a way I'm giving you nutshell of your syllabus. I'm giving you what is the relevance of the topics which you are going to read, okay, which you are going to study, which is there in your syllabus. Are you able to understand, my dear friends? Okay, sir. Sir, how? Let's see one by one. Correct? Yes. So coming on to the first question, which business to start, right? And if you just talk about the second question, quantum of investment required in the business. Okay. If I'm talking about these questions, tell me, out of these topics which are there in our syllabus, which topic will help us? If you just go through, you'll understand, yes sir, capital budgeting, right? When we say budgeting the capital expenditure, right? So obviously this particular topic number 8, I can say, is going to help us. Okay. Topic number 8. Right. Fantastic. So this question can be answered there. Next one, third one, from where will we procure the money? From where will we get the funds? Okay. So can you just guess which particular topic will help us with this? From where will we get the money? Come on. Just have a look at the topics. Ratio analysis, leverages, cost of capital, capital structure. No sir. Topic number 11, sources of financing. Correct. So this particular topic can help us. Whether you can get the money from domestic sources, whether you can get the money from international sources. So like that, if you want the answer, right? Domestic, international, then maybe debt, maybe equity. So these answers will be given by the topic number, these answers will be given by the topic number 11, correct. So this topic will help us. Okay, sir. Next, what is the composition of investment? How much should be the composition of debt? How much should be the composition of equity? Again, in debt, how much should be the composition of debentures? How much should be the composition of loan? Correct. So like that, we would like to know the proportion. So now tell me which topic, which topic out of these topics which are there? Obviously, we'll say, sir, topic number 5, as you could see, capital structure. So can give this answer. So I'll say topic number 5 will give us this answer. Correct. Composition of investment, that is proportion of debt, proportion of equity. So one may say, sir, is it that debt should be amounting to 100%? Debt 100%, equity 0, or debt 80%, equity 20%, or debt 50%, equity another 50%. Like that, what should be the right composition? What should be the correct composition or the best composition of the investment or the money which you procure will be answered from which topic? Capital structure, correct? Okay, sir. Next, what is the cost of bringing the money, right? Which topic do you think will help us? What is the cost of bringing the money? Come on. Yes, sir. As you could see, 4th topic, cost of capital. So there will we calculate the capital. So topic number 4, which is cost of capital, is going to give us the answer. Okay. Right. Cost of bringing the capital, because anyone who's giving the funds, as I've told you earlier as well, will be expecting something in return, isn't it? You also give money to someone, obviously you'll expect some return, right? If you buy shares of a company, you'll expect some return. If you give someone a loan, right, you'll expect some return. So your return, your expectation is the cost for that person. So here, if we think from company's perspective, which is raising funds, right, we'll have to meet those expectations. So expectations of the investors is nothing but the cost of the company, correct? Cost for raising those funds. So cost of bringing the money, we'll understand from topic number 5, isn't it? Yes, sir. Then we've got 6th one. What is the risk involved in doing the business? Come on, guys. Which topic will help us with this? What is the risk involved in the business? So this, sir, leverages, you said, is instrument to measure risk, and we could understand here also there is some term called as risk. Which one shall we take? Which one do you think we shall be taking it? So if you are thinking about topic number 9, then I must tell you that you're wrong. But if you're thinking about this topic called as leverages, that is topic number 3, then you're absolutely right. So topic number 3, okay, topic number 3 is what will give us the answer for what is the risk involved in doing the business, right? There may be operational risk, there may be financial risk, there may be financial risk. So operational leverage will give us the operational risk, and financial leverage will help us understand the financial risk. So this way, please understand this topic number 3, leverages, will answer this question. Maybe one can say, sir, quantifying the risk 100% may not be possible, right? It may not be accurate. How can you measure the risk accurately? Tell me. It's not possible. So one thing for sure, measurement of risk, I'll say measurement of risk cannot be accurate or 100% accurate. Okay. But yes, to some extent at least we'll understand the risk, and which will help us in taking proper decisions. Okay. Right, sir. Next. Then when we talk about 7th question, if business earns profit, how much profit shall be shared with the shareholders, distributed with the shareholder? Which particular topic will help us? Right, you'll say, sir, very easy, because we have this topic number 6, dividend decisions, that will be answering this question of ours, right? So 6th topic, dividend decisions, will be answering this. If business earns profit, how much should be distributed? So there will be some distribution of the profits, there will be some retention of the profits, correct? Whatever you distribute is dividend, and whatever you retain is nothing but the retention. So how much should be the retention, how much should be the distribution? That has to be answered by which topic it will be answered? Yes, topic number 6, which is dividend decisions. Right, sir. Then talking about the next question, if doesn't have money, then borrow money and buy asset, or take asset on rent or lease. So obviously lease financing, which is topic number 10, isn't it? Topic number 10 will answer this question. It will say, sir, it is very easy, no? If you have to, take some, if you need some asset for short term, then you hire it, and if you want to take it for long term, then you go for buying the asset. But my dear friends, please understand, even for long term purposes, sometimes we need to take the asset on higher basis, or it will be beneficial if we go for rental basis, isn't it? Is it always necessary? Let's say I am a resident of Hyderabad and I want to reside in Hyderabad. Okay, this is final, this is decided. I am not into employment or something where I'll say I transfer will take place and all. So in that case, do you think if I want to stay in Hyderabad, always the best option is to buy a house? No, may not be. Please understand, maybe taking a house on the rental basis might be more beneficial than buying a house. It's quite possible. So we need to ascertain that, we need to understand that, we need to evaluate that. That is where topic number 10, lease financing, will help. Okay. Yes, for short term purposes you may say leasing, for sure. For long term purposes also leasing might be beneficial compared to buying option. Okay, how and all, that is where topic number 10 is there, lease financing. Right, the next question, how to manage day-to-day business and finances? How to manage day-to-day business and finances? Again, think of these topics which are there. Come on, how to manage day-to-day finances and business. Obviously, this is topic number 7, working capital management. When we talk about working capital, we're talking about what? Day-to-day management, no? So please understand the day-to-day management, right? The day-to-day finances, like inventory management, you will say, correct? Which will include not just the finished goods but also raw material, WIP, because we're talking about mainly manufacturing concern. Then cash management you talk about, debtors management you talk about, the receivables management, right? How to manage the day-to-day operations will be answered by what? Will be answered by topic number 7, which is working capital management. Okay, see, please understand a simple thing. It is not just enough that you buy the asset, but you need to maintain that asset as well. You need to use that asset as well. In order to use that asset, in order to maintain that asset, again there will be certain expenditure, there will be certain things which will be involved, correct? So it's not just buying an asset will be enough, but rather you will have to spend on that asset, you'll have to manage that asset well, you have to use that asset well. So that's where we're talking about day-to-day management, right? So working capital management is the one which is going to help us with this. Okay, we'll answer these questions. Okay, sir. Then coming to how to judge the performance of the business or the financial health of the company, right? Which topic do you think will be helping us with this? Leverages, cost of capital, capital structure, dividend decision, working capital management, lease financing, capital budgeting, sources of financing. Which one? Yeah, sir, second one, ratio analysis, right? Ratio analysis. So with the help of the ratios, we'll be able to evaluate the performance. So please understand, my dear friends, topic number 2, ratio analysis, is what will help us analyze the performance. Okay, so kindly note the second topic, ratio analysis, is going to help. See, like how a doctor checks your your health, physical health, same way you can say the financial health of the company will be checked by whom? The finance manager, by the financial analyst, correct? The experts of finance field. So like how doctor uses certain tools, these persons also will be using certain tools. So one of the tools is nothing but ratio analysis. With the help of ratios, we can evaluate the performance of the business, right? We can compare the performance of this business with another business or with another firm, another competitor, or who knows, you want to evaluate the performance of the company with the company's own performance, meaning some past year period performance you will take and compare with the current year's period, correct? So this way, what I'm trying to say is, if you want to judge the performance of the business, it can be done with the help of many tools. One of the tools is ratio analysis, which is there in our syllabus. So topic number 2, ratio analysis, can answer this question as to how to judge the performance or financial health of the company. Correct? With the help of ratios, we can answer that question. Then how to take business decisions under risk and uncertainty. So that anyways, you know, topic number 9 is there. Correct? Capital budgeting under risk and uncertainty. So that's what I can write here, right? Topic number 9 is about this risk and uncertainty, capital budgeting and uncertainty, under risk and uncertainty. Because as I've told you, every business will have risk, right? Business means future, future means there's uncertainty, and you need to take sometimes decisions of what do you say, capital expenditure under that risk and uncertainty. So that's where this topic number 9 will be helpful. So if you just observe, right, all the topics, right, topic 2, topic 3, topic 4, 5, 6, 7, 8, 9, 10, right, or 11 is answering each of your questions. So this is what FM is all about, guys. If you want to do business, you will have certain questions in mind, and these topics which we are going to read is going to answer those questions. And overall financial management, right, the introduction, the conclusion of the financial management, that is there in the first topic, right? So first topic is what probably, or is, if you understand, is what I'm discussing now. I've started discussing because I'm discussing scope of financial management. I'm giving you the introduction to the financial management, isn't it? Right? We'll be discussing now objectives of financial management. So that's nothing but the first topic. We are already into first topic. Yes. Right, sir. So we have followed this, right? All of you have understood, correct? Okay. So now let us get into the next thing, which is objectives of financial management, right? Okay. So when we are discussing this topic, objectives of financial management, we'll have to talk about the 3 key important areas, aspects, you can say decisions, okay, and discuss the objectives of financial management. Okay, sir. So that means what I'm saying is that when we discuss this topic, objectives of financial management, there are 3 areas which have to be kept in mind. There are 3 key aspects which have to be kept in mind and discuss this objectives of financial management. Okay, sir. But before that, I hope all of you have followed this, whatever questions I have raised, and we have understood that how the topics will help us answer that. In a way, you got an outline of the whole of the syllabus. In a way, you have understood what exactly happens in financial management, I guess. Right. So now, as I've said, let's get into this next topic, objectives of financial management. So when I'm discussing this, okay, I hope all of you are noting down first of all. If you are not noting down, I request you all to please open a notebook and start writing with me, okay? So 3 key important decisions, 3 key important areas. 1, I'll say financing decision. Okay. 2, I will say investment decisions. 2, I'll say what? Investment decisions. And 3rd, I'll say dividend decisions. Okay. 3rd, what would I say? Dividend decisions. First one, financing decision or decisions. Second one, I said investment decision. And then 3rd one I've added there is dividend decisions. Right, sir. So what are we trying to say here? When I'm talking about financing decision, please understand this means I'm talking about nothing but liability side of the balance sheet. If you recall the T format of balance sheet, right, left hand side, you've got liabilities side is what we are talking about when I'm talking about financing decision. Okay, so it's nothing but the liability side of the balance sheet I am referring to. Okay, when I'm talking about the investment decisions, that means if you understand, we are referring to the asset side of the balance sheet. We are referring to what? Asset side of the balance sheet. Okay, right, sir. Now financing decision, liability side, that means if you understand, we are talking about debt and equity here. Guys, we are talking about what? Debt and equity. And when I'm talking about the asset side of the balance sheet, okay, investment. So where do you think a businessman will invest the money which he has procured? So sir, fixed assets or current assets? So that means if you understand, we are talking about here what? The fixed assets, correct? The fixed assets and the current assets. When I'm talking about the asset side of the balance sheet, that means we are referring to what? The fixed assets or the current assets, right? So investment decisions relates to asset side of your balance sheet, whereas financing decision refers to financing decision refers to what? Liability side of your balance sheet. And when I'm referring to liability side of the balance sheet, we are talking about debt and equity. And when I'm talking about investment side of the balance sheet, that means I'm talking about fixed assets and current assets. Follow till here? Yes sir, definitely we have followed. So now when it comes to this financing decision, what is that decision which you need to take? Also sir, debt and equity is what we need to procure the funds from, but how much of debt we need to take, how much of equity we need to take, that is the question, which depends on definitely cost as well, because there will be some cost if you're procuring the funds from debt, there will be some cost if you're procuring the funds from equity as well, right? Whether you procure the funds from debt, whether you procure the fund from the equity, you will have certainly some cost. So that is where the question, that is where we say that we have to take some decision. So now guys, can you tell me which particular topic will help us with this? Obviously you'll say sir, topic capital structure and cost of capital, correct? Capital structure, that is nothing but the structure, proportion of the capital, how much debt, how much equity, and then how much is the cost of that particular debt, how much is the cost of that equity, right, is going to be studied in topic capital structure and cost of capital respectively. Okay sir, right. When I am talking about this side, okay, investment side of the balance sheet, which topic do you think we are talking about? You'll say sir, capital budgeting, of course, capital budgeting under risk and uncertainty, right? Capital budgeting under risk and uncertainty. Is the topic, plus I'll say working capital, because we said we are talking about even current assets, isn't it? Let me just beautify to some extent. Right, so the topic which we are talking about here is capital structure, cost of capital, and then capital budgeting or capital budgeting under the risk and uncertainty, working capital as well. That's also going to help us, isn't it? So now guys, now please tell me what is the objective, what do you think is the objective of this side when I'm talking about financing decision, when we have to take a decision relating to how much of the money to be procured from debt, how much of money to be procured from equity, right? So what is the objective here? Can you guess? Right, if you're thinking about minimizing the cost, then you're absolutely right. The objective with respect to the financing decision is minimizing the cost. And can you guess here what is the objective? Okay, what is the objective when I'm talking about the investment side or investment decisions related? Yes, maximizing. If you're thinking about maximization of the returns, that is return on investment, then you're absolutely right. Okay, minimizing the cost is the objective of the financing decisions, right? Financing decision making, and investment decision making has the objective of what? Maximizing the return on investment. Okay, in short I can say ROI, return on investment, that has to be maximized, or I can say maximizing returns, that also is fine. Okay sir, so now the question comes, when I'm talking about this cost, okay, when I'm talking about this cost, what is that cost? Minimizing the cost. Cost of what? Cost of debt or cost of equity? So please understand, we are referring to the overall cost of capital. We are referring to what? overall cost of capital, right? When I'm talking about minimizing the cost, that's overall cost of capital is what I'm referring to, which I can say is nothing but WACC. So, sir, what? WACC. Yes, sir, but what is it? See, that is where I must tell you that the relevance of short forms or the relevance of the, what do you say, abbreviations which you use. You know, I have told you in the other subject as well that if you use some short forms, you should be careful that you define them and use it, or maybe ICAI is using and that's where you're using, or maybe universal acceptability it has got, so that's where you're using it, isn't it? One, you define and use. Two, ICAI using and you using. And third one, yeah, you and everyone. That means universal acceptability it has got, and that's where you're using it. So as of now, probably you don't understand this WACC, or who knows, you already know it. This is nothing but weighted average cost of capital. Okay, weighted average cost of capital. So the idea is to minimize the cost, and that to which cost? Overall cost of capital. Overall cost, so obviously average cost of capital. But which average we need to take? Not simple average, weighted average cost of capital. Where are we going to study this? Obviously calculation of cost. As I've told you, cost of capital is the topic where we'll study this. Okay, so this is the objective. I'm just trying to get into some details now. Exactly the details we will see when we go to the respective topic, but this particular topic number 1, nature and scope of financial management, which we are discussing now, will help you understand overall financial management, overall syllabus of yours. Okay, right, sir? So we have understood the objective now, correct? So I just want to elaborate on this to some extent. Okay, tell me, are we going to even study the risk? Are we going to even talk about risk here? In the financing decisions, do you think there is some risk involved? Same way, is there any risk involved in the investment decision side? Yes, sir, both the places we have. So at both the places, if you understand, what is our idea? Our idea is to minimize the risk. So I will write that also here. We want to minimize the cost, we want to minimize the risk as well, as far as the financing decision is concerned. Same way, we are talking about the investment side. Is it that the investment side also should focus on both? The answer is yes, right? So here also we'll say minimize the risk. Whenever some decisions have to be taken with respect to the investment side, investment decisions have to be taken, there also we'll say minimize the risk. Okay, sir. So maximize the returns, maximize the returns and minimize the cost. Maximize the returns, minimize the cost, and overall you have to minimize the risk. So minimize cost, minimize risk is the objective of financing side. That's nothing but dealing with your liability side of the balance sheet. And then when I'm talking about maximizing the returns on investment, that means we're talking about what? Investment side, the asset side of the balance sheet, right? So there also we expect that the risk should be minimized. Now can you guess, okay, can you guess, when I'm talking about this minimizing the risk, which risk are we talking about here, and which risk are we talking about here? Here we are talking about financing risk, correct? Financing risk. And here we are talking about operational risk. Okay, we are talking about operation, investments, day-to-day operations will be investing the money. So we would like to we would like to minimize that operational risk. And this anyways will be taken care in the chapter, in the topic called as leverages, operational leverage, financial leverage, correct? Right, wonderful. Now guys, tell me one thing now. Okay, I'm proceeding slightly ahead and taking up something more. Let's say the company increases debt. Let's say in financing side I'm talking about, company increases the debt. Do you think the burden of the company will increase? Yes, sir, definitely. If they're increasing the debt, then the burden will increase. That means the risk also will increase. The risk also will increase. And can I say, when they increase the equity, When they increase the equity, is the burden increased? No, sir. Because if you bring in your own funds to do any business, obviously you can say the burden will not increase. What about risk? The risk also will not increase because you're using your own funds. The owner's funds are being deployed into the business. So how can we say that the risk will increase? No, risk will not increase. So if you just understand, if more and more debt is brought into the business, more and more debt is brought into the business, what will happen to the risk of the business? Risk will keep on increasing. Which risk I'm talking about? Financing risk. And if you bring in more and more funds from the shareholders, from the owners, what will happen to the burden? Will come down. So thereby the risk also will come down. That means financing risk will come down. From company's perspective, I'm talking about. Okay, if you understand from the company's perspective, the risk will increase if they go for more and more debt. Just imagine you're doing some business. If you keep on taking debt, loan, okay, keep on taking, don't you think the burden will go up? Right? Don't you think the risk will increase? Yes. Sir, but somewhere we have read that the cost of debt is always cheaper. Cost of debt is cheaper than cost of equity. You might have heard of it. So we need to understand how to minimize the cost. How much proportion of debt should be there? Okay, so that how much proportion of debt, because see, if you keep on increasing the debt, that means your risk is increasing. If you keep on increasing your debt, your risk is increasing, but what is happening to the cost? Cost will reduce. Cost will reduce. But what is that you're supposed to do? You're supposed to reduce the cost, you're supposed to reduce the risk as well. The objective is what? Minimize the risk, minimize the cost. But if you keep on increasing the debt, cost may come down, but then risk will increase. And that's where the challenge for the finance manager. If you are the finance manager of the company and if you have to procure funds, if you take more and more debt, maybe your cost will come down because debt is a cheaper source of fund. Correct? Debt is a cheaper source of fund. But what will happen to the risk? Risk will keep on increasing. And that's where your role. Okay. If you say, sir, if that is the case, let's go for equity only. Let's not go for debt. Correct? That's also possible. That's quite practical as well. That they might say, the company might say that, okay, let's go for 100% debt-free company. That means total funding should be from the shareholders, from the owner's fund. So in that case, what will happen to the risk? The risk will come down. But don't you think the cost will go up? Don't you think the cost will go up? Yes, because as I said, debt is cheaper than equity. So equity is always costlier. If you're taking funds always from equity, then it will always be costlier. So when it is costlier, what will happen to the cost? Will go up. And what was the objective of financing side? Minimize the cost. So please understand what is happening if you go for more and more debt. The cost might come down, but the risk is increasing. And if you go for more and more equity, what is happening to the cost? Okay, cost is going up, risk is coming down. So there is a problem. We want what? Minimizing the risk, minimizing the cost. We want to minimize both this. And that's where the role of finance manager. Are you getting it? What is it I'm discussing? I'm discussing objectives. So I am saying that in financial management, there are three important areas. Procure funds, take the money and use it. That means invest. And then when you do that investment, you will get some return and you would not like to retain completely those profits, but would like to distribute as well. So whether to distribute or not to distribute, if have to distribute, then how much to be distributed, that is dividend decisions. So there are three important aspects. Correct. So one of the aspects is financing decision. Financing decision means it's about what? The capital structure, right? About the cost of capital, right? How much debt, how much equity, what is the cost of debt, what is the cost of equity. So we would like to know that cost and minimize that cost always. Overall cost of capital should always be minimized. And at the same time, the risk also should be minimized. Correct? Which risk? Financing risk. So I am saying that's a challenge because if the cost has to be minimized, that means more and more debt has to be there. But more and more debt would lead to what? More and more risk, which is going to be contradictory. And that's where the challenge for the finance manager. Now, one may argue here, one may ask here that, sir, how can you say that the cost of debt, see, we denote cost as K here. in financial management, yes, cost as K. Now why, there's no answer for that, but then cost K, right? So that's where it's like denoted by way of the letter K. Cost of debt, KD. When we say KD, that means you should understand we're talking about cost of debt. Cost of debt, I said, is cheaper, correct? Is cheaper than what? Cost of equity. Can you guess how will we denote cost of equity? Yes, KE. If you're thinking about this, then you're absolutely correct. Cost of debt is cheaper than cost of equity. So one may ask, on what basis can we say this? Now, so please understand. Let's say you're a debenture holder. You're a debenture holder. Do you think you'll get security? Yes, sir. Do you think you'll get interest till the time that money is repaid? Yes, sir. Right? When it comes to repayment, do you think you'll get priority? Yes, sir. As a debenture holder, don't you think you'll get some security? That means if your money is not repaid, then you can use that asset to recover your money. Then if I'm talking about interest, correct, you will keep getting the interest on those debentures, isn't it? Till the time that debentures are redeemed. Then in terms of repayment also, don't you know they'll get priority. If company gets into winding up, then debenture holders will always get priority over the other unsecured creditors or the shareholders, isn't it? So now don't you think when we are talking about they having security, they getting interest, they getting repayment, that means they are safe, no? They're taking lesser risk, no? So if they're taking lesser risk, the debenture holders are taking lesser risk, how much will be their expectations? Lesser only. If you're taking more risk, your expectation will be more. Like now, if you have decided to do CA, that means you have taken risk. Sir, yes, sir, huge risk we have taken. So what will be your expectation? Huge. Right? If someone, after becoming a chartered accountant, if someone asks you to work for him for 20,000 per month, will you be ready? No. Always will say, no, I have taken huge risk, I want huge returns, isn't it? That is a fundamental rule. Please understand, guys. The fundamental rule, let me just try it once, which is applicable not just for financial management, any part of the life you can say, fundamental rule I am talking about, okay? Sorry. Higher the risk, higher the return. And I'll say vice versa. Lower the risk, lower the return. So now these debenture holders are taking lower risk. So if they are taking lower risk, that means their expectations is also lower. That means the return which they expect is also lower. If you invest in, let's say, a bank, you're taking least risk, so your expectation is also lesser. But when you invest in share market, stock market, don't you think you're taking a risk? So there your expectations also will be more. So that's what I'm trying to say. Debenture holders risk is lesser. Okay, debenture holders risk is lesser. That is why what is happening is his expectations is also lesser, and that's where we can say the returns which he wants also is lesser. So in a way, if I'm talking about his return, means in a way I'm talking about cost of the company. Cost of the company is also what? Lower. Did you follow what I said? When it comes to debenture holders, right, or any debt provider for that matter, bank giving loan also you might say, might take security. There will be some security in their favor. Interest will be paid. In case company gets into winding up also, they will get priority, isn't it? So what is happening to the risk? The risk is lower, the risk is reduced, isn't it? When it comes to debenture holders, the risk is lower. So if the risk is lower, the expectations also will be lower. That means the return which they expect will be lower. And if they're expecting lower return, that means what? The cost to the company also will be lower. Now you just take the case of equity shareholder, right? Shareholders. Is that they have been provided with any security? Do they get any security? No, they don't get any security. What about their expectations? Sorry, their return, that is it that the dividend is paid for sure to them? No, that's also not there. Maybe company has profits also, they may not pay, correct? Maybe the company has got profits, but they may not give dividend, they may not pay dividend. Reason, they would like to go for expansion, diversification, that's where they would like to retain the funds, who knows. So my dear friends, please note, there is a strong possibility that that company may not pay dividend to them in those cases. So dividend may be uncertain. Now coming to repayment, if the company goes into winding up, do they get priority? No, you know that already, that they'll be distributed, they'll be given back their money at the end, at the last, after paying off everyone, they might pay to the shareholders. So that's where the risk which they have taken is more, no? And if they're taking more risk, that means their expectation will be always more. Higher the risk, higher is the return which they'll expect. So if they're expecting a higher return, what will happen to the cost of the company? Cost of the company also will go up, no? Whatever is the return, please understand one simple funda. Whatever is the expectation of that fund provider is nothing but return for him, and that is only the cost for the company. That is only the cost for the company. Understand? Yes, sir. So cost of debt is cheaper than cost of equity. So more and more debt you use, that means what will happen? The cost will come down, but then the risk will keep increasing. The risk will keep increasing, right? There will be a debt burden on the company. So that is where the finance manager has to balance out how much debt, how much equity, so that the overall cost is minimized and the risk also is minimized, right? And if I just compare this with, let's say, water and milk, okay, the milkman also, you know, dilutes that milk by adding what? Water. Why? Because the cost of water is what do you say, cheaper than the cost of milk. So what he can do is he can add some water into it, and thereby the overall cost might come down. It can happen, no? Right? But if he like, let's say, comes and gives you directly water only, right, then obviously, I mean, you're not going to accept it. So same way, if you're going to take complete debt, that's not acceptable. That cannot happen. If you go and ask someone some debt, he'll say, how much money did you put into the business? He'll ask you that question first, isn't it? So one has to understand this clearly. Yes, sir. So we have understood this. Now, I think better I take an example and explain this to you in brief, because anyways we'll discuss in detail, but I would just like to take an example here and make you understand this. Okay, this debt proportion thing. Okay, we are going to study the example which I'm taking, we are going to study in detail later when we go to the cost of capital chapter, but I'm giving you slight idea relating to what is this cost of debt, cost of equity, what is the overall cost, debt proportion, equity, how it will, I mean, change. I'm just taking some examples so that you will feel interesting as well, otherwise it will be like only theory today, है ना? So I'm taking some example. Let's say there is some cost of debt which is 12%. Let's say there is some cost of equity which is 12%. Okay, and let's say there is debt equity mix. Okay, debt equity mix of 80% and 20%. 80% and 20%, or shall I make it first 20 and 80? Yeah, that will be better. So let me make it first 20 and 80. Okay, sir. So now when we have to calculate that overall cost of capital, okay, let me call it as KO. Overall cost of capital I'm calculating. So cost of debt we know is 8%, cost of equity we know is 12%, debt equity mix we know is 20 is to 80. Okay, or I can write it this way, no, 20% is to, instead of writing that, I can say 20 is to 80, that is the debt equity mix. So now let's take what? Overall cost of capital. So I have to take 8%, multiply by the proportion of debt here, plus I need to take 12%, which is the cost of equity. That's also the cost. Multiply by the proportion of equity. Am I right? So 8% into what? The proportion of debt is 20%, so I can write 0.2, and then the proportion of equity is 80%, so I can write 0.8. So which means now 8% into 0.2, which would mean what? 1.6%, and then 12% into 0.8 will come to what? Some 9.6%. Correct? So now if you just add these two, it will come to what? 11.2%. Am I right? See, unnecessarily don't use the calculator. If required, use it. Now this particular calculation you can do it like manually as well, so don't take the help of calculator. You can save time in the examination as well. Just be attentive, and if you think you can solve it by yourself, ignore calculator. You think no, the calculation is complex and you should use it, use it. Or maybe you are not that attentive, you're like nervous. It happens. It might happen in the examination time that you are feeling that pressure, feeling that heat, and you may not be able to concentrate well. So then use calculator for even simple calculations. Okay. Otherwise, don't waste your time. Okay. So coming on to this, what did we say? The cost of capital is, the cost of debt is 8%. The cost of equity is 12%. Debt equity mix of 20:80 I have taken. So if I calculate the overall cost of capital, I said take 8%, multiply by the proportion of debt, plus 12%, which is the cost of equity, multiply by the proportion of the equity. So that is how we got 11.2%. You'll say, sir, some mathematics also is required for the financial management. Yes, not just accounts and costing, but some maths also will be required. Some calculations we'll have to do. So it is required. Okay, now if we want to reduce this overall cost of capital, the idea is what? Minimize the cost. Which cost? Overall cost of capital. How do we minimize? Come on guys, what did we say? If we want to minimize the overall cost of capital, that's what is the objective of financing side, correct? Minimizing the cost, overall cost. So what should we do? You'll say, sir, if you want to minimize this, then the cheaper source of funds should be more, costlier source of funds should be lesser. That means, in short, you are telling me that, sir, increase the proportion of debt because debt is cheaper than the equity, correct? So let's calculate cost of overall cost of capital by changing the debt equity mix. Okay, so first I'll have to write the debt equity mix. Okay, let's say there's a change in debt equity mix. So what is the debt equity mix we want to have? Let's make it 80-20. Okay, let's make it what? 80:20. Okay, sir. So now let's see what happens to the KO, overall cost of capital. See, cost of debt is 8%, and we will have to multiply with the proportion of the debt, plus 12% is the cost of equity, which we'll have to multiply with the proportion of equity. See, weighted average. So I'm taking weight. Weight means what? The proportion. How much is the proportion of debt? How much is the proportion of equity? You'll say, sir, 80% is the proportion of debt. That means it will become 0.8. Whereas 20% is the proportion of equity. So it will become 0.2. I cannot write percentage again. Percentage into percentage is not possible. So that's where some mathematics also is required. So that's where please write 0.8. Right. So now 8% into 0.8 comes to what? 6.4%, you'll say. Then this one will come to what? 2.4%. 12 into 2 is 24, so 2.4%. Now if you add these two, you will get what? 8.8%. What happened to the overall cost of capital? It has come to 8.8%. And how much was the overall cost of capital earlier, guys? You just observe. Earlier, how much was it? Earlier it was 11.2%, and now it is 8.8%. So kindly note, what we have done is we have increased debt. With the increase in debt, what has happened is overall cost of capital has come down. The overall cost of capital has come down. But just reducing the cost is not the objective. Reducing the cost and reducing the risk also. But if you just observe, by increase in debt, I'm sorry, what has happened to the risk? Risk also has increased. But what do we want, right? That is where I'll say challenge. For whom? The finance manager. The finance manager. Because the cost has to be reduced plus the risk has to be reduced. If we can balance these two, that means the objective is met. Which objective? Objective of financing decision. Are you able to follow me what I am doing? I am discussing objectives of FM. Okay, wherein I said there are three important areas, three important aspects. One is financing decision, another one is dividend investment decision, and the third one is dividend decision. With respect to financing decision, we said liability side of the balance sheet is what we are referring to, financing. Asset side, when we are talking about investment decisions. So when I talk about liability side, we are talking about debt and equity, correct? Because where will you get the funds from? Your own pocket or maybe from outside. So own pocket means equity and outside means debt. Where will you invest in the business, right? Asset side. So where will you invest? What will you have to do the business? Fixed assets and current assets is what you need, isn't it? So that is where I said if I want to connect with topic, I said cost of capital and capital structure is for liability side, and capital budgeting under risk and uncertainty or working capital is for investment side. What's the objective of this financing side? We said minimizing the cost, because there is a cost involved for the capital you procure. So that cost should be always minimum. So overall cost is what we are referring to, and that overall cost is nothing but WACC, right? Weighted average cost of capital, right? When it comes to investment side, we said maximizing the return on investment is the idea, right? And which topic can help us? We said capital budgeting and capital budgeting under risk and uncertainty, plus obviously working capital management, right? Working capital management. Right, sir. Now, apart from this, we said the objective is to minimize the risk always. We want to always minimize the risk, whether it is financing side, investment side, anyways. So when I'm talking about risk, how will we measure the risk? When I'm talking about financing decision, the risk will be measured by financial leverage, correct? So this is this financial leverage, okay, and this one is operational leverage. If you understand, financing risk measured by financial leverage. And the investment risk which is there is the operational risk. So that's measured by operational leverage, correct? Right. Then I just wanted to further elaborate so that you understand it properly. So that's where I was saying that whenever the company increases debt, the burden of the company increases, and also the risk of the company increases. Whereas if they increase the equity, owner's capital if is increased, burden is not increased, risk is also not increased. So both burden and risk reduces. Okay. Then what I said is cost of debt is always cheaper than cost of equity, correct? So when the cost of debt is cheaper, obviously we would like to use more and more what do you say, debt. But if you use more and more debt, then the risk increases, and if risk increases, that means you are not able to meet the objective. That's where the challenge for the financial manager, right? Finance manager. Then I've told you the fundamental rule is higher the risk, higher the return, and vice versa. If you take more risk, then only you can earn more returns. If you take lower risk, then you will get lower return, right? Someone who's doing BCom, how much can he earn? He's taking lower risk, so his return also will be lower. You're doing CA, if you get through CA, right, you've taken higher risk, so return also will be higher, correct? Then we said if I'm talking about debenture holder, who will get security, who will get interest till the redemption takes place, who will get what do you say, priority in repayment if company goes into winding up. So that means he is taking lesser risk. So he's taking lesser risk, so his expectation will be lesser, his returns will be lesser. That means the cost to the company also, the cost of the company also will be lesser, right? Then I have written here for you that expectation is nothing but return for him. That means the cost for the company, whatever he expects is return for him, right, and the cost for the company. Then we were calculating, right, this particular overall cost of capital, that taking an example that if cost of debt, right, cost of debt is how much? 8% I said, and cost of equity I said is 12%, right? Because cost of, why did I take 8% and this one is 12? Because as I have told you that cost of debt is cheaper than cost of equity. So debt equity mix, if I assume of 20:80, then the overall cost of capital we got is 11.2%. Whereas when I'm taking debt equity mix of 80:20, then the overall cost of capital which I'm getting is 8.8%. So we understand when the proportion of debt increases, what will happen to the overall cost of capital? Will come down. But what will happen to the risk? Risk will increase. That's where I said challenge for the finance manager. Correct? Did you follow this? Have you followed it? Yes. Now guys, before we move into anything, I would just like to make you understand the format which we use for the P&L in the financial management, in the subject financial management. Okay, so let me take you through that format. Objectives of financial management is not yet over. Kindly note, we have not completed the objective, but what I am discussing now is the format of P&L in financial management. Okay, slightly we change it and we use it. If you recall, we have used this in corporate and other laws as well, right? So sales minus cost of goods sold. Okay, if I want, I can put this some X and all. Okay, so sales minus cost of goods sold will give you what? Gross profit. And from this gross profit, we will deduct other operating expenses. Okay, then what will we get? We will get operating profit. Operating profit, right? And this operating profit itself will be called as EBIT, earnings before interest and taxes, or profit before interest and taxes. Okay, sales minus cost of goods sold will give you what? Gross profit. And from this gross profit, we need to deduct what? Other operating expense, so that we can arrive at what? Operating profit. And if there are no non-operating items, okay, then we can say this operating profit itself is earning before interest and taxes, earning before interest and taxes, or profit before interest and taxes. Okay, I repeat, operating profit, EBIT, PBIT is one and the same, unless and until we have got non-operating items. Because if non-operating income is there, non-operating expenses there, that also we need to adjust. But if it is not there, that means operating profit will be same as EBIT or PBIT. Okay, right, sir. So from this EBIT or PBIT, what will we deduct? You'll say, sir, interest is what we will deduct, so that we can arrive at what? EBT or PBT. Okay, EBT or PBT. And then from this we will deduct taxes. Correct, tax will deduct, and then arrive at what? Earnings after tax or profit after tax, which is in short called as EAT or PAT. We don't say EAT, we say EAT only. So it's not an acronym. EAT, earnings after tax or profit after tax. Correct. So earning before taxes minus taxes will give us earning after taxes. Right, sir. Now from this, let's say there is a preference share capital, so preference dividend will be deducted. Preference dividend will be first deducted. Then the earning which will be there, okay, which will be left, is earning available for equity shareholders. Earning available for whom? Equity shareholders. Or profits available for whom? Equity shareholders. Once we get this, then we have to subtract equity dividend right? The company decides to give some dividend to the equity shareholders, so that will be deducted. And then what is left is nothing but retained earnings. What will be deducted is retained earnings, which maybe you will say, sir, is nothing but the reserves and surplus. Okay, what did I say? See, I have not completed objective of financial management. I'm repeating again. Okay, but I am going for what? Making you understand what is this the format of P&L in financial management. Okay, yes sir. So sales minus cost of goods sold is giving you what? Gross profit. From this gross profit we are deducting other operating expenses as well, so that we arrive at what? Operating profit. Then I said operating profit is same as EBIT or PBIT, that is earning before interest and taxes, or profit before interest and taxes. This will happen only when there is no non-operating item. If there is non-operating item, I need to take that also, no? Operating profit plus non-operating profit minus non-operating expense, that will give me earnings before interest and tax. But that adjustment is not required now. Okay, let's keep it simple as of now. So I'm saying operating profit, EBIT, PBIT is same. Okay, from this EBIT I said before interest and tax, so interest we'll have to deduct, so that we can arrive at earning before taxes. From that we have to deduct taxes, and then from there earnings after tax. Taxes we deduct, so after tax is what is there, and then earnings after tax we'll deduct the preference dividend from it. So once we deduct preference dividend from it, then we get earnings available for equity shareholders, and from that we give the equity dividend. So whatever is left is the retained earnings, which is nothing but the reserves and surplus. Okay sir. So now is there any sense in this format? Is it that the traditional one, trading, P&L appropriation account, which we use normally in our accounts? Yes, if you understand, here I've used that. See, when I'm talking about this, you understand, from sales to gross profit is nothing but trading account. In your accounting, you take this as trading account, right? Secondly, from gross profit to this PAT, right, after deducting interest, taxes and all, whatever you get is nothing but your P&L account. Come on guys, are you able to follow? Sales to gross profit is trading account, right? And then from gross profit to this PAT is P&L account. And then if you just notice, this part is nothing but P&L appropriation from your net profit to retained earnings, P&L appropriation account. So the same thing, but we've changed the way it looks. In financial management, we'll be using this particular way, so I am using it. Okay, but otherwise, if you understand, the traditional one only is what is there. Maybe sometimes it is possible that we might write like this also: sales minus operating expense is equals to operating profit, that is nothing but EBIT or PBIT, assuming that there is no non-operating item. As of now, let us not talk about non-operating items. When it is required, I'll talk about it. Okay, so I hope you have understood. This is also another way. Now same, minus interest, like that you will continue. Same thing will continue. Okay, right. So this is another way of presenting. So in this operating expense, if you understand, in this operating expense which I have written here, okay, in which I have written here is nothing but cost of goods sold as well as other operating expense. Both I have clubbed. Other operating expense, both I have clubbed, right? Okay, now before I proceed further, sales minus cost of goods sold. Cost of goods sold. So sales is at selling price. Cost of goods sold, that means goods sold, what is the cost price? That is cost of goods sold, right sir? So we arrive at gross profit. From that we deduct the other operating expenses, like you'll say sir, depreciation is there, salaries and administration there, marketing cost there, electricity there, rent there, like that other operational costs we will be deducting, so that we arrive at operating profit. Then this operating profit, as we said, is nothing but EBIT or PBIT, earning before interest and taxes. So now this interest which we have taken is interest on debt, isn't it? Interest on debt. This interest is which interest? Interest on debt. Now we arrive at EBT. Now we are talking about taxes. Which taxes? Please understand, we are talking about income tax here. Okay, we are talking about income tax. We are not talking about the GST. We are not talking about any other taxes. We are talking about income tax. And that too, in this income tax, please tell me which particular taxes we are talking about. Corporate tax. We are not talking about individual partnership firm. So please make sure you understand this is about income tax. Okay. Then, as we said, preference dividend, which will be at a fixed rate. Equity dividend, you don't know the rate, right? The board of directors have to decide. Preference dividend, anyways, the company has to pay. If they have already issued preference shares, they'll always specify this much of preference dividend we would pay. So they'll have to pay that much, correct? Equity dividend, yes, the company will have to decide upon that. Okay. So that is how, please understand, this P&L will look like, okay, in financial management. Okay, sir. So now, who's getting interest first? Who's getting return first? If you understand here, who got the return first? When you compare, see, these are the owners and these are the debenture holders or the financial creditors. Who is getting return first? Tell me. Obviously, you'll say, sir, interest is what is being given first, so that means they are getting return first. So if they are getting return first, their risk is lower or more? Lower. As a debenture holder, if you think, your risk is lower because you're getting interest for sure before the return is being given to the equity shareholder. Whereas equity shareholder is going to get or not, that also we don't know. So they are taking more risk. So when they are taking more risk, their expectation is more. Thereby the return is more. That means the cost for the company is more. Are you able to follow? Yes. So I just wanted to make you understand this and also connect it with that see, they'll get always the financial creditors will always get the return before the return is being given to the shareholders, to the owners. Okay. Shareholders or the owners will always get priority at the end or maybe later. Right, sir. We have followed this as well. Now, we have understood the challenge. Now, can you tell me what is the challenge for the finance manager? The challenge is to reduce the cost and reduce the risk as well, as far as financing decision is concerned. Whereas when I talk about investment decision, keep on increasing the returns on investment, but then at the same time lower the risk. But then the fundamental rule, as I said, higher the risk, higher the return. That's where the contradictory statement now for the finance manager, that you increase the return and that to lower the risk. Increase the return but lower the risk. That's contradictory, no? So the role of finance manager is going to be quite challenging and tough. Okay. Anyway, so I have discussed now the objective of the financing decision. What is the objective? Minimizing the overall cost and minimizing the risk. Then I have discussed the objective of the investment side, investment aspect, that is maximizing the return and minimizing the cost. And the third aspect was dividend decision, which we didn't discuss, right? Okay, dividend decisions we'll discuss later. We just discussed that, okay, the company has to take a decision as to whether to distribute dividend or not. If have to distribute, then how much dividend needs to be distributed, right? How much retention should be there? How much distribution should be there? That aspect, okay? Right, sir. Now, let us discuss something very important, and that is overall objective of financial management. Okay, we have discussed separately for financing, separately for investment, that is separately for liability side, separately for asset side. Now I am discussing overall objective of financial management, and let me tell you what's the overall objective. Okay, the overall objective of financial management is value maximization. Value maximization, or we can say wealth maximization. Okay, meaning what? Let's say I'm a shareholder of the company. I've purchased some shares of the company. So if I purchase some shares, let's say at what rate? Maybe 30 rupees I have purchased. Now, do you think as a shareholder, I would expect the share price to go up? Yes, sir. So don't you think the finance manager has to see to it that the share price goes up? From 30, it should move on to 50, then 70, then 100, 200, 300, 500, 800, 1000, 1200, 1700, 2000, 3000. Don't you think I'll keep on expecting this? Yes. And believe me, friends, that's what happens. Ultimately, the objective is to maximize the value per share. Maximize the value per share. The idea is to increase the wealth of the shareholder. Just imagine I have bought 100 shares for rupees 30. Now the price goes up to 50. So my wealth increases by 20 rupees per share and I have 100 shares. You just can calculate it. Then from 50 it has gone up to 170. Again 120 per share is the increase. That means my wealth again further increases. Isn't it? See, if you have heard of maybe that people say that instead of buying that particular bike, Enfield, Royal Enfield, Bullet, if you would have bought shares, let's say 10 years back, instead of buying that particular Bullet, if you would have bought the shares of that particular company, okay, 1 lakh, you might have bought that particular bike 10 years back, would have become maybe what, some 5 lakhs, 10 lakhs. If you would have bought the shares of that particular company, instead of buying the bike, if you would have bought the shares, then maybe the price would have been different. Maybe, who knows, you would have bought the Mercedes. And that's what has happened. The rise in the price of the shares have gone up to such an extent that you could have bought even Mercedes today. I'm not joking, guys. Royal Enfield, which is a product of that Escher Motors Limited, okay, Escher Motors Limited. So if you would have bought the shares of that Escher Motor Limited, worth, let's say 1 lakh shares, rupee shares, instead of buying the bike, if you would have bought this, then that 1 lakh would have become maybe to such an extent that you would have bought Mercedes today. Understand? So if the manager is able to do this, that means he is managing well. If he is not able to do that, that means he is not managing well. Are you getting it? Same way you talk about Infosys, Reliance for that matter. People say they have invested the money 25 years, 30 years back, and now they are able to, what do you say, do the marriage or fund the education of their children very easily. So they have invested some decent amount, now it has become crores, lakhs. Are you getting it? So the wealth maximization, the value maximization is the ultimate objective of financial management. Are you getting it? Now, I would again like to take an example here. Okay. Acha, before that, maybe I'll ask you one question, simple question. Okay, please answer it. Can I say value maximization is equals to profit maximization? Come on. What do you think? Is value maximization and profit maximization equal, or is one and the same? The answer is no. Profit maximization means you're just concentrating on the investment decisions where we said maximize the return on investment, right? But whereas when we talk about value maximization, we are ultimately talking about the value per share. We are not just talking about financing. We are not just talking about investment decision. We are talking about overall the value per share should keep on increasing. So that is something which is wider than profit maximization, my dear friends. Please understand. And for this, I would like to take an example. Okay, numerical example we will take to support this. Okay, so you may draw a table, small table. Now, what will we have in this table? Particulars. Okay, particulars. Then we will have a column for calculation or maybe reference. calculation or reference. Then we'll have some amount column, but we'll not have just one amount, we'll have three columns for amount. So I'll say scenario number 1, scenario number 2, scenario number 3. Okay, and then I'll write here amount is in rupees. Okay, the figures denote amount in rupees. Right, sir. So particulars are there, calculation or reference is there, scenario number 1 is there, scenario 2 is there, and then scenario 3 is there. This is how we have got 3 scenarios. Okay, what is that I'm doing, guys? My question was, is value maximization same as profit maximization? No, I said profit maximization means you're talking about maximizing the return on investment. When you invest in the fixed assets, when you invest in the current assets, your idea is maximize the return, correct? That's profit maximization. But value maximization means increase the value per share, right? So now to support this, that these two are different, I am taking some numerical example. Okay, so let me just, I hope you have drawn this. The columns which we have is particulars, then calculation or reference, then scenarios, that is nothing but amount column, and I have three scenarios here. That's why I have drawn 3 columns: scenario 1, scenario 2, scenario 3. All these figures which denote here will be amount rupees unless I change it, correct? Otherwise it is always amount in rupees. That also I have mentioned. Okay, sir. Now let's do what? Let's take some equity share capital. Let's take some equity share capital, wherein I'll say the face value is rupees 10. Okay, face value is rupees 10. Let's say this is what is given. Okay, sir. And then you'll say, sir, how much is the equity share capital? That also let's write. So let's say 2 lakhs is the amount of equity share capital. Then let's say 5 lakhs, and then let's say 8 lakhs. That means I'm increasing slightly the equity. Okay, and let's say there is debentures, and that to 10% debentures. Okay, the rate of interest for the debenture holders is 10%. So this is also given. Sir, how much? 8 lakhs. This is 5 lakhs. This is 2 lakhs. That means the capital employed into the business is 10 lakhs. That is my presumption in all the 3 scenarios. Only the debt equity mix is getting changed. Okay, so C, I'll say capital employed. Capital employed is nothing but the debt plus equity. So in the calculation or reference column, I can write A plus B. What is this A plus B? A, equity share capital, B, debentures, I said. So adding these two, A and B, will get what? Capital employed into the business. So how much is it? As you know, 10 lakhs is this amount. Guys, pay attention to the presentation also. See, I'm not using any scale pencil here, but still able to write it in such a way that it is not getting overlapped. The same thing you will have to do. So don't straight away take the pencil scale and start drawing the lines. That way you'll never learn. Without drawing lines, you should write like I am writing. And then once you complete the solution, then take a pencil and scale and draw the lines. Same thing you should do in the examination also, so that in case if you miss out something because of lack of time, what you will miss out is drawing lines, but then not the solution. You may complete all the solutions, only thing is what you may miss out is drawing lines, right? Okay, anyways, so A, we have taken some equity share capital. B, we have taken debentures. The rate of interest I've mentioned is 10%. Then in case of equity share capital, the face value is 10 rupees. C is capital employed, which is 10 lakhs constant in all the 3 scenarios. Only thing is debt and equity mix I have changed. Okay, sir. Now next, D. What is D? return on capital employed, or you can say return on investment, right? Investing into the business. The capital which is employed into the business. The capital which is procured is invested into the business. So you may say return on capital employed, or you may say return on investment. Okay, sir. So how much is that? Let's say that is at the rate of what? 20%. Return on capital employed is 20%. Okay. So can I say, guys, can I say this return on capital employed is nothing but EBIT, earning before interest and taxes? The return on capital employed. Capital employed means what? Debt and equity. What will debt get? Interest. What will equity get? Dividend. So this interest and dividend will be paid out of what? Interest and dividend will be paid out of what? EBIT, no? Correct? EBIT. Yes. So will be paid out of what? EBIT. So that's where I'm writing EBIT. Okay. If you recall this format of the P&L, which I have drawn it for you, see, the interest is paid out of EBIT, and after paying the interest only they'll pay dividend. So ultimately I can say interest and this dividend is paid out of what? EBIT. So that's where I'm saying this return on capital employed is nothing but EBIT. Okay, which is what? 20%. So now the question comes, 20% on what? Obviously 20% on C. So that's where in calculation or reference I'll write 20% into C, which comes to what? 20% into C means 20% into 10 lakhs. So 2 lakhs in each of the columns I'll be writing, because the capital employed is the same. Correct? Yes, sir. Now EBIT I have written, which is return on capital employed. Correct? Capital employed means debt and equity, both we are referring to. So both we are referring to, that is 10 lakhs, and 20% is what is the return I'm saying. So 2 lakhs is what is return on capital employed. Okay. Now guys, how much is the interest on debentures? Next item which we'll have to take is interest on debentures. Sir, we have already mentioned 10% is that interest on debentures. So 10% on what? Shall I take D? No, wrong. No, this is 10% debentures. So obviously I have to write 10% on B. So which comes to what? 80,000, 50,000, and then 20,000. Am I right? Debt, that is debentures, is 8 lakhs in the first option, first scenario. So 8 lakhs into 10% will give you what? 80,000. Then 5 lakhs into 10%, 50,000, and then 2 lakh into 10%, 20,000. That is how I have written interest on debentures. Right, sir. Next, F. Come on, what will we get? EBT, right? Earnings before taxes. Because now from EBIT we can deduct interest. So earning before interest and taxes minus interest will give us what? EBT. How will we get EBT? D minus E. So that means 1,20,000, 1,50,000, and this is what? 1,80,000. Am I right? 2 lakhs minus 80,000 is 1,20,000, 2 lakhs minus 50,000 is 1,50,000, and 2 lakh minus 20,000 is 1,80,000. Correct, sir. Now let's take the next item, which you know is income tax. So I'm writing tax. Let's say tax rate is 40%. Flat rate of tax is what we'll take, because you know company form of business we're talking about. So now when I say 40% on taxes, guys, sorry, 40% taxes, tax of 40% on what? On obviously F. So I'll have to write F into 40% or 40% into F, isn't it? So 1,20,000 into 40% is 48,000. 1,50,000 into 40% is 60,000. 1,80,000 into 40% will be what? Some 72,000. Correct? I hope I'm right. And in case you find calculations are wrong, obviously you can just let me know, or you may correct it. Normally it will not be wrong, don't worry about it. So 1,20,000 into 40%, 48,000. 1,50,000 into 40% is 60,000. 1,80,000 into 40% is 72,000. Now what will we get? EAT. EAT. So EAT is what? EBT minus taxes. Am I right? So F minus G. Come on, guys. First, I have taken equity share capital, different amounts, debentures, different amounts. Okay, so I got capital employed, A plus B. Then I have assumed, because this is my example, so I have assumed return on capital employed is 20%. So 20% on capital employed. Then we've got interest on debentures, right? After subtracting that from EBIT, we get EBT. From that, we are deducting taxes, and thereby we arrive at what? EAT. So EAT is F minus G. So 1,20,000 minus 48,000. Correct? If you take that, how much will you get? You can use the calculator if you want, or if you know the answer, that is well and good. So that's working out to 72,000, my dear friends. 1,50,000 minus 60,000 will give you 90,000. We don't need calculator for this. Then 1,80,000 minus 72 will be giving you how much? 1,08,000, right? Sorry, this here also calculator was not required, but anyways. So what did we notice here in this? We have noticed that the profit is more or maximum in scenario number 3. Scenario number 3, where what? The equity share capital is 8 lakhs and the debentures is what? 2 lakhs. Correct? This is the proportion where you could find that the profit is more. Am I right? Yes, sir, you are right. Now, let's take it further. Sir, what will we do? We have already calculated EAT. Now, let's say number of equity shares. Let's take what? Number of equity shares. If I divide earnings after taxes by number of equity shares, what will I get? I'll get EPS, earnings per share. You know that, right? If I divide number of equity shares, okay, number of equity shares. If I divide number of equities, no, if I divide EAT, earnings after taxes, by number of equity shares, I'll get earnings per share, isn't it? So let's say number of equity shares. First of all, how will we get number of equity shares? We know the amount of equity share capital, which is how much? The amount of equity share capital is different for different scenarios, but that is given in A. So let me write here A and then divided by rupees 10, correct? By rupees 10. So we will get what? The number of equity shares. So this is already in number. So I don't have to change anything there, because you'll say, sir, figure denote amount in rupees. Yes, but here I am mentioning number of equity shares. So that means this is number only. So first scenario, the equity share capital is 2 lakhs. So 2 lakhs divided by 10 is how much? 20,000. Correct? Then 5 lakhs divided by 10 is how much? 50,000. Right? Then how much is 8 lakhs divided by 10? 80,000. So when we are dividing this, we will get what? EPS, right? So now how do we get EPS? H divided by I, that is EAT divided by number of equity shares. So you'll say, sir, okay, 72,000 divided by 20, 3.6 you should get, right? Just check. Divided by 20,000. Yes, 3.6 is the earnings per share. Total earnings is 72,000 and 20,000 is number of equity shares. So that is where we are getting 3.6 as the earnings per share. Right. Then 90,000 divided by 50,000 will give us what? 1.8 as the earnings per share. Then 1,08,000 divided by 80,000 will give us what? 1.35 as the earnings per share. Correct? Right, sir. Now let us go further. EPS is, I said, 3.6, 1.8 and 1.35 respectively. This is of course in rupees again. This is not number. Now let's say the investors are ready to pay 10 types of the earnings to buy the share. Let's say the investors are ready to pay 10 times of the earnings per share to buy that particular share. So that means I am talking about P ratio, if you have heard of. P ratio, if you have heard of, okay, is 10 times. Okay, let's say is given. So I cannot write 10 times here. I'll have to write here given is 10 times. But sir, if you write 10, it will denote rupees. So that's where I'm writing here times. What is P ratio? Price earning ratio. which is nothing but liking of the investor. Liking of the investor in terms of earnings per share. So when I say 10 times is the liking, that means 10 times of earnings per share he is ready to pay to buy the share of that company. Understand? So in situation 1, 10 times of earnings per share, that means 3.6, 10 times of 3.6 is 36 rupees. 36 rupees is what he is ready to pay to buy the share. So now with this, that means I can calculate value per share. Value per share, or if you want me, I'll write that way only, value per share. How will we get this value per share? We will get this value per share by multiplying J and K. So the product of J and K, that is EPS and price earning ratio. 3.6 is EPS in first scenario and P ratio is 10. So 36. Same way this is 18 and this is 13.5. Now guys, if you just observe here, where is that we have maximum value per share? Situation 1. So kindly note what has happened here. Okay, is situation 1 where the debt was more. Just observe, the debt is more in situation 1, correct? Whereas in case of situation 3, the equity is more, correct? Different scenario we have, and we got more profit in situation 3 but more value per share in situation 1. With more debt we could achieve the target of maximizing value per share. Are you getting it? So that is where the role of finance manager comes in. Here we have taken some assumptions, no doubt about that, but point is very simple, that see, profit maximization doesn't mean value maximization also will be there. Profit maximization is different, value maximization is different. The role of finance manager is to overall focus on what? Value maximization. So with this example, I just wanted to show you two things. One, see, this is how the format should be, this is how the calculations are like, okay. And secondly, I would like you to understand that there can be a difference between profit maximization and value maximization. It is not necessary if profit is more, that means value per share also will be more. No, that won't happen. Okay, right, sir. Achha, what is P ratio? Come again. P ratio means liking of the investor. Price earning ratio is the full form, which is nothing but liking of the investor. Liking of the investor in terms of earnings per share to buy that share. Okay, so 10 times is the liking. 10 times of what? 10 times of earnings per share to buy that share. That means the value of the share is nothing but based on these two factors, EPS and price earning ratio. That's where I could multiply these two. Followed it? Right, sir. So now if you want, you can draw the lines, right? You can just see once again, equity share capital, then debentures, then capital employed, then return on capital employed, which is EBIT. Then we have calculated interest on debentures, then we got EBT followed by taxes, then EAT, then number of equity shares I have taken, then EPS, right, because EAT divided by number of equity shares will give us EPS, and then P ratio followed by what? Value per share. Understand, my dear friends? So with this we have understood that profit maximization and this value maximization is not same. That was my idea to solve this particular, what do you say, example or numerical example. Okay, right, sir. So what is the overall objective of financial management? Value maximization, wealth maximization, correct? And what is the objective of the investment decisions? Maximizing the return on investment and minimizing the risk. Financing decision, what is the objective? Minimizing the cost, minimizing the risk. Right, sir. So we have understood the objectives. Yes, sir. We have understood the objectives. Something more is left in this, but anyways, when we meet in our next session, we'll be talking about it. Okay. So we'll be discussing more on the scope and objective of financial management. So today we have discussed general instructions, right, which I gave you. Then we have gone into the topic nature and scope of financial management, because when I discuss the the syllabus. I have also discussed the relevance of that syllabus with the help of some questions, and then we have discussed objectives of financial management. Slightly something left there which we'll complete in our next session. Okay guys, so I hope you have understood the topic, you are able to follow what I have discussed, right? In case you have doubts, you are anyways welcome to message me, right? Ask your doubt, right? So thank you so much, God bless you all, and see you all in next session. Bye bye. Yeah.